Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live, get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts, we crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
Well, good morning, everybody. Coach Michael,
Hello.
how you doing? Coach Alex, nice to meet you.
Hello.
How you gents
Very
doing?
nice to meet you too.
Oh, wonderful.
Well,
It's a wonderful Monday to start. Coach Alex is new with us today, ladies and gentlemen. Coach Alex, where are you from? Tell us a little bit about
Originally,
yourself.
I'm from the UK. Originally I'm from the UK, but I'm in Australia now. Have been for, I don't know, last 20 years, more. So, yeah, I've got a bit of a weird accent. So if you go, he sounds
I was just
Australian,
going to
but
say
sometimes
we can
he
hear
doesn't. Yeah, cool.
It's the
Easy.
world accent.
Yeah, but
It depends on which continent you're in.
Yeah,
Yeah,
exactly.
I know exactly what that's like. I go home to Tennessee once in a while and bring back the Southern accent quite thick. It never really shakes me. It's always with me, but it seems to get thicker when I go down for a visit and come back.
That's it. That's
it's
exactly right.
hilarious. I could have bet. I could have bet money that I could have guessed where you were from.
Yep. Yeah, it's I feel like it's quite distinct between Australia and the UK. A little bit more of the Aussie accent. So good stuff.
for sure.
Good stuff. So
Because it
yeah,
always sounds like a Crocodile Dundee, right? Is it Crocodile
Yep,
Dundee?
yep.
Who had that word?
Yep.
Yeah.
Now that's a knife.
Yeah.
Oh,
There you go. That's sounds.
One of my need to get my light a little bit better. Put
Yeah,
it
I was
there.
thinking
We go. Yeah, I had my light pulled out, the one that's in front of me, because I was charging something, but I flipped it and replaced it. So, well, cool. Yeah. So, Alex, tell us about your trading. How long you been trading? What do you prefer to trade, and maybe what kind of trading strategy that you like to do? And we'll get into some charts here in a few minutes. But yeah, we always just kind of wake up, get the caffeine rolling first thing for, I don't know, 5, 10, 15 minutes. But yeah, just let us know a little bit about Alex's secret sauce.
I mean, I've been trading for the past 10 years now, so it'll be 11 years in November, which is crazy. But yeah, I'm a Forex guy, have been my entire life. I mean, I trade a whole load of stuff from futures, commodities, gold. You know, being around, of course, you do when you're trading and you're in the market for such a long period of time. But yeah, my specialty is definitely Forex. So your major pairs, your minor pairs, and scalping. So today I will be on the 5-minute and 1-minute charts using a bit of market open and VWAP. So it's pretty simple, actually. Bit of breakouts, retests in there. So yeah, it's going to be shaking it up a little bit, but it's going to be fun.
Awesome. And what time is it, by the way, where you're at?
The time is 6:06 p.m.
Oh, okay. All right. Good deal. Well, it's 3:06 a.m. where I'm at, and same with Coach Michael there. He's in Mexico, and I'm over here in the Kansas City area. So, yeah, we burn the midnight oil, don't we, Michael?
Yeah, for sure. Especially on Sundays, we'll do the market open, and then sometimes do the quiet markets, and then turn right back around and do the Forex Fire session. So 3 sessions back to back sometimes. Like, yeah.
Wow.
Yeah.
We hear about
I wouldn't be able to do that.
Trading. Oh yeah. This is what it looks like.
How far are weeks over, Michael? By midday Monday, right? It feels
exactly.
like.
Exactly. Like, I'm supposed to feel like this on Friday, not Monday morning.
Right. Good deal. Well, Michael, what do you have going on this weekend?
Nothing too much. I see we got some people in the chat too. What's up, Brilly? I see Webb's here. No Sleep Narrator. Christian. You guys jumped right on. We love that. Love that.
Good morning, everybody.
Chris and I see you want to go over US 30, gold, Bitcoin. Yeah, we'll definitely get into all of that for sure. Looking forward to Alex's P&L today. That's for you, Alex. I'm No Sleep Narrator. So I'm on a trader spotlight and explain things so simply. Awesome. Night owls. Yes, we are. I saw Christian showed me some love yesterday in the Discord. Said he's looking forward to my breakdown. So we got you. Christian. Don't even worry.
Good deal.
But yeah, for me, not too much went on over the weekend. I think I might have mentioned my daughter goes to school on Wednesday. We thought it was to Monday, which is today technically. And then we get an email saying, "Oh no, the kids go back to school Wednesday." I'm like, dang it. We got 2 more days.
2 more days.
Got 2 more
little
days.
Humans in the house.
Because man, like we got so used to her like being in school for that 9 to 2, those prime 5 hours, and it's just good for her. She sleeps better when she gets home. She's around other kids instead of just I want to get in the pool and bossing us around all day. So like, all right, she was out for 2 months. So like, all right. So we had to wrap up some things with right. We just had to wrap up some things for school for her. And yeah, that was pretty much it. We had somebody who came in town who lives in Baltimore, Maryland. They're going to be here for quite a while until April. Yeah, April 2026. Their first time here in the city in Puerto Morelos. So we had to get them together, put them with our main group of people, introduce themselves, and just got them what they needed for the most part. So, and we got to see them at the beach. So that was pretty cool. Yeah. Saturday. And yeah, Sunday just relaxed, watched some TV, ate some good food as always. And that is about it. Right.
Did you stay away from the agave plants this weekend?
No, never. Why would I do that? When I go to the beach, it is on.
Yeah,
it is on. Matter of fact, I sent the picture. I think I sent the picture that you were rich. Remember, I sent that picture.
Oh, that's right. Yeah. I was going to return the favor, but me and my girl, we got a little busy with music and watching TV with her nephew and all that. Yeah, you can't live in Mexico and go a weekend without visiting the agave plant. That's true. That was a
It's
silly
nearly
question.
impossible.
Well, you are going to have to get the obligatory first day of school picture whenever she does go to school. Make sure you
For
share that
sure.
with us on Wednesday, or
For
I guess
sure.
that would be Thursday, first chance you'd have. So good
Right,
deal.
right.
Good deal. Yeah, I took my girl out. We went and replaced part of my wardrobe because 2010 called and they wanted their clothes back. So it's just like, let's go get some more. Let's go throw some of these shirts away. Send them to your nephews. Send them to your nieces, nephews and cousins, and let's go get some new stuff. So yeah, it's great. I will say this: it was actually a perfect idea having her tag along because she can approve or disapprove of something I pick up in 2 seconds.
Yeah.
So that way, it's no brain power I have to expend. At the end of the day, I'm dressing for her anyway, right? So yeah, we've got a bunch of shirts. Yeah, we're working on the pants and the shorts next time. But yeah, then we went to a really nice dinner, brand new place. She likes her steak. She says medium rare, and I guess they brought it out and it was more medium to. Well, it was. I guess it was medium. So I said, well, to me that looks perfect. She likes it. She likes steak whenever it's mooing at her, mooing and bloody. She says.
Yeah.
I'm like, no.
Yeah,
I don't know.
That's in the middle.
Yeah. I just, you know what? Maybe I'm the weirdo, but I've always just preferred it well done. I don't like pink. I don't like blood. I don't like it mooing at me. So that's just my
Me
taste.
neither. Me neither.
She said
If it has too much pink or red in it, I cannot do it. I used to work in a restaurant not a long time ago, like forever ago, but it was called the Texas Roadhouse. You've probably even heard of it before.
Yeah.
I used to work there.
Really good place.
Sometimes people literally was like, they want theirs charred, or I forget the name they called it, but it's like, bring it out, throw it on the grill for 5 seconds, flip it over, and then bring it to me. And you would bring it to them. It looks burnt, but there's so much blood on the plate. I'm out to puke, even trying to bring it to them. Like, that is disgusting. I cannot believe you want to eat this meat like this.
I don't get it.
Disgusting.
Alex, how do you do? What do you think, man? Medium rare, well done. Am I the weirdo, or is everybody else the weirdo?
I don't mind the medium rare. I don't mind it, but if it's it's a pool of blood coming out of it, I'm probably going to send it back and say, hey, maybe just a little bit more.
Yeah. The only time I've ever eaten medium rare is when I was in Vegas. I was there for a bowling tournament for national bowling tournament, and a buddy of mine, we were gambling all night, and like literally all night. Of course, they give you a free complimentary breakfast at this hotel we were at. Mm-hmm. They had steak and eggs on the menu, and of course he orders his medium rare, and he said, "Just take a bite, Tiger. Just take a bite of this. Just take it." Like, he didn't give me a choice. Of course, me, I'm still a little bit, sideways. I'm like, whatever. It was actually pretty good, right. I have to admit, but was it also because I was, I had a few cocktails by then, so didn't care.
Right.
I don't know, but it actually wasn't that bad. So I gotta say, yeah. But anyway, good stuff. Well, Coach Michael and I were on last night, Alex. We were just kind of looking at things from a 30,000-foot view as far as the markets go. Obviously, we had the Trump-Putin summit on Friday.
Yeah.
I'm getting an alert on gold, but I'll get that in a minute. I only turn my alert off here. But anyway, yeah, that I don't know. Depends on who you ask, right? The left or the right, as far as was it a success, was it a failure? But yeah, that seemed to kind of be the main spotlight on things right now. I mean, today we do have President Zelensky meeting the Oval Office. And by the way, I think, what time was it? I think I saw it was like 1:15 today, New York time. I'm assuming that's what the schedule is showing here. Get all these alerts or things on. Yeah, 1:15 a.m. or 1:15 p.m. So looks like President Putin, some of the other leaders of Europe, they'll be there to cuss and discuss, as they say, and hopefully we can knock out a peace deal at some point. You've been following that closely at all, Al?
close as we get down here. Australia is really the bottom of the world, so we know what's going on, but our politics is very insular. So it's more of, how should I put this? A boring story about some far off politician that's done something extremely, I don't know, mundane, like walking the dog in the wrong temperature or something like that. So that's usually what gets onto the front page. Ukraine gets a little 5-second blip and then goes, oh yeah, it's still going on, just in case anyone wants to know. Back to regular scheduling.
Yep, he woke up. He had steak and eggs. He clipped his toenails. There, that's all you need to know. For the day.
Right.
Exactly.
Yeah.
Exactly.
Yeah, I was.
Now I see one.
I've definitely
I see one post from the Living Social. It was like a notification. I clicked it, and it just says, "All right, President Trump headed to Alaska on Air Force One," and he just walks up the stairs and waves, and that's it. I'm like, really? Do we really have to know that?
narrate every little move. Yeah, I've been keeping a close eye on it just because of gold and silver's sake. That seems to be my top pairs right now, as far as items to watch. We'll get into the charts here in a little bit, but yeah, cool. So what I usually like to do is just kind of jump into the COT report a little bit. We got news here in about 14 minutes, I believe. So, as always, ladies and gents, I love checking the COT, see what the big banks and institutions, see what they're buying and selling, because obviously.
My bad, Tiger. Just looking at the chat here.
Webb.
Coach Alex, Webb is saying, what's your favorite pairs to trade? What's your favorite pairs?
So I'll be focusing on oil, so USO USD and Euro USD tonight specifically. Those are my two favorite pairs that I've been trading recently.
Oil?
Nice. Okay.
Mm-hmm.
Hopefully that answers
you have to teach. You'll have to teach Michael and I how to trade oil. We've been watching these charts for quite a while, and it's pretty much the problem child with our trading styles. So it'll be interesting to see how you attack oil.
Yeah, I love that. I love that. It trends heavy. You hop in at the right time, you can get a massive move. So yeah, but it can be quite frustrating. So I understand why you might want to stay away from it.
Yeah, I mean, I tend to stay a little higher time frame. Supply and demand zones is what I trade, so we'll get into that. But yeah, it seems like kind of like Michael's setup. It sets up, but then it just doesn't want to complete the setup. So, but anyway, yeah, thought I'd throw that out there. But and correction, by the way, it looks like we're. Yeah. We get to go to school today, Coach Michael. That's great.
Let's see.
Correction, by the way, looks like we'll do the news piece at 4 a.m. 4 a.m. So that'll be about 43 minutes from now. So yeah, that'll give us a chance to. I'll go through the COT report, and we can kind of check out some of these pairs and learn a little bit about oil. So let me just flip on over real quick.
I see Tanaka, one of our account winners, is saying, good morning. Is it advised to open any trades or wait for the outcome of a meeting? We don't have any news today, right? Not any main news. We don't have real news until
Yeah. Today's all about the geopolitical items. Yeah. Pretty much geopolitical day. And that's like I said, I think that's around 1:15. I'm assuming that's New York time, looking at this schedule. So, what did the big banks and institutions buy and sell? So for anybody in the chat, I always look at the COT report Sundays here in the States, obviously, because that's when the market's open, Sunday evening. The COT report, it's a report showing what the big banks and institutions did as far as increasing or decreasing their longs in the futures market for the underlying assets that we keep an eye on. So that report typically comes out around 3:30, 4 o'clock my time here in the U.S., here in the Kansas City time zone. So it'd be about an hour later in New York time, but but it's always delayed, right? It's always about 3 days behind. They just, the way they set it up is the report's released Friday, but it's current as of 3 days prior, which is Tuesday, to the Tuesday prior. So basically accurate as of 3 to 10 days prior, if that makes sense. So it gets confusing. It would be nice if it were one of those instant reports we get, but hey, such is life. It's not the end all be all. I think some people might get the impression that that's the only thing I care about, but it's not. It's only one of about 15, 16 different fundamental and sentiment pieces of news I look at, reports and the such.
Right.
So sorry guys, I'm trying to get my voice ready to go. So here we go. So yeah, what did they buy? What did they?
Tanaka's asking you, where do you get the COT reports from?
One source you can go to is barchart.com. I'll vet it from the back end. Maybe we could show that at some point. I don't know if they'd be okay with me sharing that or not. But yeah, it's a public site. Anybody can hop onto it. But yeah, really, you go to barchart.com. You look under the futures market. You look under non-commercial, because we only care about the big banks and institutions. Yeah, I'll see if I'm allowed to share that or not. I don't know. I'll have to find out. But if so, I'll definitely pop that up here in a little bit. But yeah, basically it's just showing kind of the overall positioning for the major currencies, the indices, Bitcoin, gold, silver, right? So it shows the overall positioning, but it also shows the week-to-week changes. So if you're a position trader, a longer-term buy and hold, you'd want to keep an eye on, obviously, the net positioning, the overall positioning. But only thing I care about as a short-term swing trader is the week-to-week changes. So just giving a quick glance at it, they didn't really increase a whole lot. They increased the NASDAQ by 1.63%. So that's increasing their long percentage by 1.63%. So they definitely scooped up some NASDAQ. They scooped up some Dow. That was 3.23%. And they scooped up the Nikkei. So that's the overall winner, is the Nikkei. They did increase 9.82% on their long. So those three indices are really at the top. And then when it comes to currencies, the US dollar was the big gainer there at 1.93%. So that was really, and then Bitcoin right behind, 0.8%, kind of a small increase. But just rounding out the indices, Russell was only a very modest 0.28% gain. And then let's see, S&P 500 though was the biggest loser among the indices. So they increased their shorts by 3.5%. So minus 3.5% when you look at the barchart.com or whatever COT report you're looking at. In fact, I have some really cool graphics. So again, I'm gonna look up a couple sources. Maybe I could present those later, get those vetted first. But yeah, that's indices in a nutshell. Again, the dollar was the biggest increase, 1.93%. And then when it comes to things that are more neutral, meaning they didn't really buy or sell that much, really you had neutral on the New Zealand dollar, the Aussie dollar, the British pound. Yeah, those main ones. But as far as the sells, they did increase their shorts on Swiss franc by 1.46%. The JPY, the Japanese yen, by 2.64%. And then looks like the biggest sell-off was the Canada dollar at 2.79%. So I just like to kind of go through those numbers just to get a basis of what the banks and institutions did, because at the end of the day, they're the ones making all the money, right? So if they're doing something, I like to try to mimic that on a chart and then on the fundamental reports as well. So anytime I can pair, a weak currency with a strong currency, that's what I like to do. And then just going to the economic surprise meter. Well, we still have the New Zealand dollar leading the way. They have beat expectations on 75% of their most recent economic releases. So New Zealand, I think they only had one release last week. That was the manufacturing PMI report, and that was a bullish release as well. Previous of 48.8%. So underneath what I call the Mendoza line, that's a baseball stat, baseball terminology. So under 50 is retraction, over 50 is expansion, right? When you're just looking at some of these baselines. But yeah, they had 48.8 on the previous number, but they actually increased it to 52.8%. So they went from contraction territory to expansion on their manufacturing PMIs. So yeah, it's New Zealand has really been surprising of late. Again, with all just looking at the fundamental reports as a aggregate. But yeah, that's still the top one. British pound right behind it at a 71%. So it's been exceeding a lot of expectations as well. And then turning to the U.S. dollar, it's right down the middle. It's 50%. So 50% beat expectations, 50% miss expectations. But the biggest, the most bearish ones would be the Aussie dollar and the Swiss franc, and they're tied at 43%, right? So only 43% of their reports have beat expectations. So not really too bad, but yeah, it's still currently, I think it's been like this for 2 or 3 weeks now. New Zealand dollar leading the way at the 75% mark. But they also haven't had a whole lot of releases either. Like I said, they did have the MPMI report last week, but it's been a little bit longer prior to that since anything else has been released. August 5th. Yeah, there were a couple on August 5th, but anyway, that's just a little bit about the strength meter. Now, again, that's not the end all be all. It just gives us an idea of what's beating expectations and what's not. And then, of course, if a report is neutral, meaning they nailed the expectation right on the head, then we just don't even include that. I'm only caring about the beats and the misses. So, but yeah, when all that shakes out, taking a look at the economic data, the technicals, the sentiment, Alex, typically what I do is if a report beats expectation for a currency pair or an asset, then it gets a +1. If it misses expectation, it gets a -1. If it's on par, it's just a 0. It's a neutral. And then I make a scoring system for all the economic data, the GDP, the PMI data, the retail sales, the inflation data, the employment numbers, interest rates, and then also the COT, the retail positioning, seasonality trends. So after all that shakes out and you add it all together, if you get a 5 or higher, I kind of look at that as a bullish bias, just from a fundamental perspective. Anything that's a -5 or lower gets a bearish. And then obviously 4 to -4 is neutral. I don't tend to, look for setups. So I personally, just with my trading style, I only care to look at stuff that has a very, fairly bullish or biased sentiment according to the data. And then that's where I go to the chart to time and entry. Right. So just thought I'd let you know kind of how I approach the markets. So anytime you hear me throw out a number, pound Aussie's a 4, DK's a 6. That's what I mean when I say that. But yeah, just looking at my bullish biases right now, I've really only got 4 at the moment. And I think they're pretty well the same from last night, Michael. So the euro US dollar, I do have a score of a 5 as a bullish. And that's the only currency pair I have at the moment. Now, I've got 3 or 4 that are a score of 4, so just really only need one more good piece of news for those. But yeah, really, my watch list is very simple today. It's the euro dollar long. The Nikkei is the only index I have on my bullish bias. So that's a score of a 6. And then gold and silver are leading the way, 1 and 2. Those are very, very, very bullish scores of 10 and 11. So gold is 11, silver is 10. So those are really the 4 main setups I'm looking for on the bullish side. And then on the bearish side, real quick, looks like euro pound is a -5. The U.S. oil, which is our problem child that you're going to help us with today, that's a -8. Dollar Swiss and dollar Swiss is -8 as well. And then dollar Japanese yen leads the way in the bearish category at a -11. So yeah, gun to my head, I get 2 things to trade. It's gold and it's dollar Japanese yen. One long, one short. I try to simplify it like that so that I'm not looking at 28 different pairs writing up a whole bunch of chart of markups and then not do anything with them, right? So that's just kind of how I do it. But yeah, that's basically what I'm looking at from a fundamental standpoint. We can take a look at a couple of these, just looking at gold and silver. Actually, that's the one I have here. So, yeah. So far on gold, here, I'm just going to full screen this. On gold, I'm still keeping my biggest eye on the 3,300 level. That really hasn't changed in the last couple of weeks. If I'm getting a bullish bias, I only want to buy this market. Well, it's obviously been in a short-term downtrend. If we're looking at a 1 hour time frame, just kind of lower lows, lower highs. But on the daily, obviously it skyrocketed, but then it's been going sideways since, what was that, April? So pretty soon after Liberation Day, right? But yeah, about the best spot I'm seeing, just looking at pure supply and demand, would be this demand zone down here. So that's at 3,300 level. As always, anybody in the chat, I like to see that basing action and then a strong move out. The origin of a strong move, whether it's up or down, it's the same with supply and demand, right? So that's my number one target I'm looking at, that 3,300 level. If I'm looking down at some smaller time frames, I do have a 15-minute demand in this area here I'm looking at. Okay, really nice strong move out of that. That's the origin. If I'm looking for a continuation move, well, shoot, it looks like it's already hit it. So I have this little 5-minute demand here, and look at that. It's bouncing perfectly. So just in the time during our introduction, there was a good gold trade that looks like I might have missed out on, and that's totally fine. Just kind of bounced, and it's already up at about a 3-to-1, almost 2.5 to 1, 3 to 1, right? Assuming I would have gotten into this and put a stop loss under this area. Let's see what that calculation would have been. Buy on the proximal bounce. Yeah, so that's 167. Yeah, and it's already, pretty close. 8, 16, 24, 32. So yeah, a little better than a 2-to-1 already, just on this bounce right here. Mm-hmm. So I guess that's a moral victory, right? Picked a good zone, but when we're
still
flapping our
strategy.
lips, yeah, it makes me feel good. So yeah, so that's obviously old news at this point. So I'm just going to delete that. That way I don't look at it and think I want to get back in on a bounce. Because I typically, Alex, I try to stay away from zones after they've been mitigated, after they've been touched.
Yeah.
So, and not only that, but it was a narrow range to begin with. I mean, not a very tall zone, right? So, but hey, works out. That's moral victory number 1 for the day. So what's next? Well, I got this 15-minute zone down below. So that's another opportunity right here. I'm going to go ahead now and put an alert for that minute proximal line of that zone. And I'll just throw it out for the end of the week. We'll see if and when it gets hit. Then, just give me a nice little bounce out of the long side. That's basically what I'll be keeping an eye on now on gold. Now, in the course of price coming down, if it forms a supply zone somewhere in this area, then obviously I would, look to adjust my risk reward accordingly. It just depends. Like if it were to go straight down from here as an example, well, then we'd have a nice little supply zone form right here, right? So it's ever evolving. It just depends on how price moves. If it goes sideways and kind of peters downward slowly, I may just go for the top. But if I see price drop real strong, then that would be the origin of a strong move. So I'll just delete that for now, and that's basically the current play for gold, in my book. We had a little fun, and we were drawing some sock puppets last week, Alex. That's why you see this silly-looking forearm.
Yeah, I was like, what is that?
Yeah, we cut up. We act a little silly on here. Trading is all about chart art. Coach Richard, that's normally on here with us. He's really big into the market geometry. So, as far as putting on his pitchforks and going for confluences with some of the higher time frames and some lower time frames as well. But he refers to it as chart art, and we've been seeing some of the other coaches drawing fun little pictures, so we decided to get into the action as well. But
Right.
anyway, so yeah, that's gold. That's gold number one. Silver. Let's flip on over to silver real quick. Silver is the trade that I did get a small loss on last week. I closed it out on Friday. I had originally gotten in on this little zone right here. Wicked in nicely. I felt pretty good about it for a little bit because I was getting wicks in, but it kept getting rejected, right? So this was my original zone I had drawn up here. But yeah, it just eventually went through. And I was more interested in this demand zone down here, but I've had a lot of trades lately that have just run off and left me, meaning they came down just ahead of my zone and then took off without me. So, and you know what? If I had to do this trade all over again, yeah, see the 4 hour. So that's the last. Let me go delete my order block. So yeah, last red candle down. That was a very explosive move up. So if I had to take that trade all over again, I still would. It still met my rules, but sometimes, just like with any trading strategy, it doesn't work out, and that's okay. That's the cost of doing business.
I call those natural losses. Like, as long as you actually followed all your rules, followed the process, no strategy is 100%. So that, that difference between it working out and it not, when it's set up the right way, I tag that as a natural loss. Like, even in my journaling, natural loss. There's nothing you can do about that. On to the next one.
Yeah, exactly. Now, another thing too on that zone that failed, that zone was pretty close. That 4 hour zone was pretty close to this 1 hour zone right here. So it wasn't quite close enough for me to be comfortable with calling that a zone on top of a zone, meaning, if I got two zones on top of each other, then I won't put the, typically I won't put my stop loss under that first one like I did on this trade. I'll typically put it under the, under the other zone. So obviously it's going to shorten the risk reward, but it's a nice, strong, high potential for bouncing in my favor. But yeah, on this one, I didn't. I actually kept it right under that first zone because I just thought this was quite a bit of space. So I was going to look at it just on a zone by zone basis. And yeah, I wish now that I would have because, I would have put my zone there. We did get a bounce off the zone at the bottom, and it's now moving up nicely. So there we go. You just never know which zone's going to work out and which one's not. So just so happened that one at the bottom was the better choice. But it's all good. You live, you learn. And I should have got right into that trade, to be quite honest, but I think I was a little butthurt because I missed out on that top one. So I was like, oh, fine, Silver. You just go do your thing. I'll look at you again later. And yeah, it's funny. It's ironic how sometimes you think a setup looks perfect. When the one looks a little suspect, right? And the suspect one will be the one that profits, potential profit.
Yeah.
So, yeah, that was just one of those cases. Yep. It's Murphy's Law, right? But yeah, so that's old news now. I'll get that deleted. Now I'm going to take this demand zone and color it light green. So that just tells me, hey, Tiger, it's been mitigated. There could potentially be some more leftover unfilled orders under here. But my current move is looking at this 15-minute demand right here. So it kind of formed from that 1 hour, but it's a potential zone, and then we even have another zone right here on a 1 hour, I believe it was. Yeah. So this is just basically trying to ride the trade up. So it's hit the higher time frame zone, and now as it bounces up, drill down into some, maybe some smaller zones and see if I can just catch the wave, basically. So at this point, yeah, I drew this last night before this zone was created, so I need to update that. Yeah, we'll keep an eye. I mean, if price comes down and taps into here, yeah, I'll look for a bullish engulfing candle, something with a spike on my volume spread candles. It's got to be something that's it's got to be a yellow or a red, but it's got to be like at least 2 or 3 times bigger than the most recent candles, just to show me that, potentially there's some institutional people jumping in there. And then we'll see how it goes. But yeah, that's really my current play on silver. It is low on the curve. So if I look at this most recent swing low, this most recent swing high, prices come down, and that zone, both of those zones are still in that bottom 33% of this swing low, swing high. So crab legs half off, right? That's kind of the way I see that.
As usual.
If I'd be a little more nervous if I'm buying up in this area, because it'd be buying up, above value, or obviously in the middle, diddling in the middle. So yeah, that's probably going to be my number one and number two setup right there. In fact, I better move my alert up, because now I want to keep an eye on this one. Get it to the proximal line there of the zone. Get it right. Actually, I'm going to leave it a little bit above. That way it can let me know, hey, you better look, because your zone's about to get hit, Jack. Well, there we go. That is my current play. I could even go down to a smaller time frame. See, I got 15 minute demand within, so that's confluence. I love to see confluence. Meaning I have a 1 hour demand zone, but I drill down to 15, I got a 15 minute. That's within the 1 hour. So that's sexy. But I still want my alert up top. I just want to see what happens if and when price hits this morning or this, midday or afternoon. See how it reacts off the 1 hour. If I don't get anything strong, then I'll just wait till it hits the 15 minutes. So that's really my kind of mindset and game plan on silver. So
nice.
So that's my look on the two metals. And then Nikkei and Euro dollar. I'll just look at these real quick, and then I'll pass it to you guys. I'll have news coming up in 15 minutes. By the way, do either of you two have a play at the moment? Anything you're looking at, possibly getting into? I should have started with that.
Not just yet.
Not yet? Okay. Michael, did you have anything?
No, not just yet.
Nothing? Okay.
Nothing.
Well, in that case, I'll just look at a couple more of these alerts real quick. And then, like I said, we got news coming up in about 17 minutes. So, back over to Euro dollar. That's my one bullish pair I have at the moment. Now, I'm not saying I won't take a trade if it's 4, 3, 2, right? I'll still take a trade. I'll just probably do it on a smaller time frame, because the larger time frames, those ought to be going in that direction. But it's okay to scalp. It's okay to scalp in a smaller time frame. Okay, so yeah, Euro dollar. Where did I have alerts set here? 15 minutes. Okay, so I did have, I think, a 1 hour demand down here. So I got this really strong move out. I'm loving this zone. Loving this zone. Got my couple red VSA candles coming out of it. And Alex, I since we don't really have a centralized volume for currencies, I tend to use the volume spread analysis indicator. It just basically shows me amount of activity that's being traded in any one candle. So I try to use that to kind of mimic volume. That's just the best thing I personally have found. And if there's anything out there better, by the way, anybody's open, I'd be open to seeing what you got. But anyway, yeah. So when I see a volume spread analysis, I see big red candles. That tells me there's a lot of trading action in that area. So that's kind of how I cheat the system, if you will. Cheat the system to figure out volume. But anyway, yeah, so I've got that. If you ain't cheating, you ain't trying, right? I can't remember where I heard that. I heard that a long time ago. I thought it cracked me up. I'm going to use that. It stuck to me all these years. Now we're talking about gamesmanship, just so everybody knows. We're not talking bad.
Not relationship.
Right. Yeah, exactly. Sports, trading, that kind of thing. Christian says, Tiger, according to your data, U.S. dollar, Japanese yen should be bullish in the upcoming days and weeks. Well, let's take a look. So it's obviously in the neutral camp, but let me see what number it's assigning it. Dollar, Japanese yen. Yes, minus 11. Oh, so let's take a look here. Let me look at your question again.
He said
Oh
bullish.
no,
So
I'm
actually the
looking at
exact
it.
opposite.
Yeah, I'm looking at Christian. I'm looking at it for a bearish signal. Yeah. Now, in the shorter term, it very well could be bullish to get back up to a supply zone. Like, let me just flip over there real quick. I'll come back to euro dollar in a second. Yeah, so let's just take a look at this thing logically. Yeah, so it's, when you look at it on daytime, it is definitely, been in a pretty ugly looking, but definitely been in a little bit of an uptrend. If we're just going from April 22nd till current day up, higher highs, higher lows. Again, it's kind of ugly, but currently we are basically looking between this, again, on a daily time frame. We're looking between this low. Let me just delete this. I need to delete some of this stuff. I got too much stuff on here. Daily time frame. So if I'm looking at my curve analysis, let's try that again. Got this swing low, got this swing high. So currently we are in the bottom third of this curve, right? So, but now that we're down in this bottom third, it's just been sideways. It's what I call the retail chop. So that's definitely sideways. It did kind of peak out this way. Liquidity, right? Liquidity hunting from the big banks. They slam it back down to collect liquidity under here, right? So all these buyers in this area, obviously they put their stop losses down here. What does that create? Buy liquidity. Same thing here on the opposite. All these people shorting in this area, they're creating their stop losses above this area, right? I mean, in general, obviously some are lower, some are higher. You get the point. But yeah, price is basing sideways. So that's a contraction box. If I look at that look at that. When I look at the master pattern indicator and I'm looking at contraction, okay, that's just nothing but a sideways move on a daily time frame. So I need it to do something. I need to get my stick and poke at it and just say do something, right? So the banks, they typically let price run one way or the other. It'll come down, it'll come up, but either way, what happens is they're just basically looking to confuse the traders, create liquidity to properly fuel their ultimate move, whether it's down or up. So yeah, just throwing my drawings back up there. Price comes down at bases. You got buy orders. You got stop loss orders down here, which opposite of a buy is a sell, right? Opposite of a sell is a buy. So yeah, they've already run this liquidity once, right? They need buy orders to fuel their sell orders to come back down. These stop losses, the opposite of a buy is a sell. So now they're using these sell orders to fuel their buy orders, and they're push price back up again. So what we've got is really the expansion legs of a master pattern. So I could see them running this liquidity up here before dropping price back down to collect the liquidity under here, ultimately dropping into this demand zone, which is, I think that's a 1 hour, and feel a bigger move up, an actual trending move. So that's kind of how I'm watching this. Now, again, the fundamentals are saying it's a bearish signal, that all the reports have been favoring the Japanese yen over the dollar. So we would obviously want to sell this. So as far as catching a move to the downside, I don't really, we were talking about this last night, Coach Michael and I. This zone here is a 5-minute zone. If I go down to the 5-minute time frame, that's going to be a 5-minute green candle before the big drop down. It's a 30 pip range, which is nice, but I don't know. That's probably going to be my number one spot. But ultimately, the origin of that strong move is way up here. So I got two supply zones. They're on top of each other. So green candle up, move down. Green candle up, gigantic move down. So that's ultimately my favorite spot if I'm looking to follow the fundamentals, right? If I'm looking to follow the fundamentals, then that's the move I want. But if I'm just strictly looking at the technicals, then I'd be interested in, maybe buying down here, whether on this 2 hour demand, or obviously the 2 hour demand that's back down here, which is obviously the best risk reward probability because of how strong that move up was. So it really just depends. All right. It just depends. Would I take this? Maybe on a smaller time frame. But my favorite pairs, where I personally have the most success, is following the fundamentals. So I would ultimately be interested in selling up here. So yeah, it's really presents you two trading opportunities. It all just depends on what you're comfortable with, how you see trading, whether you're 100% technical, or you like to add in the fundamentals like me. So no right or wrong answer. That's just up to you to, everybody to back test and do it, figure out how you like it the best. So, but yeah, ultimately the big banks and institutions, when they're on CNBC, all the financial newscasts across the world, they're typically talking about nonstop about whatever, retail sales, the inflation, the interest rates, right? That's all the fundamentals. So, so that's why personally I like to follow the fundamental data. So hope that helps. I know my answers can get long-winded at times, so just smack me around if I ever start rambling here. Let's see here.
We got a web saying, oh, you see it. Okay.
Oh, go ahead. I'm going to take a drink of water.
Oh, well, cool. Need help, coaches. I'm trying to day trade and enter trades on a 5-minute chart. I'm still figuring out how to form a daily bias. Could you share your process or what you look at each morning? Yeah, that's definitely a good one. Let's see here. Yeah, I mean, for sure, looking at that's not a bad idea in my opinion. So, and we can kind of dig deeper. I know we got news here in about 8 minutes. But yeah, I mean, you definitely want to be looking at the higher time frame. That's for sure. Entering trades on a 5-minute, that can obviously work out for you. But yeah, definitely want to make sure that you're getting that higher time frame bias, and then just kind of drilling down and seeing maybe support and resistance levels, some break and retest, some pullbacks, things like that. So yeah, we can kind of jump into it as well, and I'm sure Tiger and Alex have their own opinion about that as well. But yeah, I can't say it's not that difficult, but good starting point for sure is to see what the daily is actually doing, what the trend is, right? As they say, trend is your friend until it bends, right? So
a little bend at the end. Yep. That's it.
Right.
Yeah, that's it. I mean, the age-old method is basically if you're on a 5-minute time frame, taking as far as your execution time frame, you'd be wanting to look at like a 1 hour, a 30-minute or a 1 hour, just to make sure you're getting higher highs and higher lows. If it's in line with the daily, even better, because ultimately the daily is stronger. The higher time frame is stronger than any lower time frame, regardless, whether it's supply and demand zones, whether it's trends, whatever, it really doesn't matter. So yeah, I try personally to get the daily and if I'm on a 5-minute or a 15-minute demand zone, which sounds like it's down where you're at, then yeah, I'd be looking at the 1 hour, the 4 hour, and the daily. If I can get all three of them to line up, that's just an extra stronger confluence. If you've got the hour going up, maybe the 4 hour sideways and the daily's going down, again, this is all because of higher highs, higher lows, or vice versa, then that's not the greatest confluence. Not saying that the lower time frame won't work. Sometimes it will, sometimes it won't. But yeah, just a 30,000 foot answer to that. 1 hour, 4 hour, daily. If you can get all three of those in line, you got a pretty decent chance that you're trending upwards.
Mm-hmm.
Can you look at any one time frame on its own? Yeah, sure. But that's just, again, where you kind of have to play with it. play with it. But ultimately, yeah, Michael's, I think he's correct. I mean, yeah, daily, daily 4 hour, 1 hour. So like me, my favorite all-time frames is trading zones out of the 4 hour and 1 hour. So yeah, I'm still looking at the daily there for sure, but daily and weekly tends to be where I'm at, making sure the zone's up or the trend is up or down depending on my bias. But yeah, what do you think, Alex? Any thoughts on trend analysis there?
I mean,
5 minutes.
I've used, to be honest, I think when you're starting, it's really helpful to have that confluence, to look at your daily, to look at your 4 hour, 2 hour, whatever it is, and have everything in alignment, because it just makes sense, especially when you're learning market structure. Yeah, so you're trying to get your higher highs, your higher lows, lower highs under your belt, figuring them out where they are. Yeah, if you can look at multiple different charts and multiple different time frames, I should say, and they're all moving down, well, that's going to give you a pretty strong indication. However, for the past couple of years, or even more, I do stick to just one chart and one time frame, and I don't need to go on to anything else. However, in saying that, I've been trading for a while. Price action is my thing. I absolutely love it. So in saying that, I've used my experience to get to a point here. But if I was saying to start out, yeah, absolutely. Start from the daily and work your way down. Get those confluences under your belt. And if you do find just one time frame that works really well, because I love the 1 hour, that's my wheelhouse, then you can just stick there. But I mean, you can really make anything work in trading, can't you? So we can say all this stuff and we can go, oh yeah, like this is a good way. But I'm sure there's 100 different traders out there that go, no, Alex, you don't need to do that. You just need to do this one thing here. And if you've got the data to support it, well, you've got the data, and I can't say anything about that.
Right.
Yeah. Really, the common theme with any question we get asked is there's always gray area. Right. There is no one right or wrong answer. Some things work part of the time. Some things don't work part of the time. So yeah, I'm the same. I think the responsible thing, just my first instinct is to say that, yeah, you get a few time frames in confluence with each other, then that increases your odds, obviously. But yeah, when you start learning the behaviors of these currency pairs or indices or whatever you're trading, you can start to see, okay, well, maybe I only need to pay attention to this time frame, or that time frame for trend, for curve analysis, like what I like to do, for entries, right?
Right.
So yeah, just to start, I would say good rule of thumb, just get 2 or 3 of those higher time frames in confluence, and that'll definitely help you out. It definitely won't hurt you, right? So yeah, hopefully that helps on that. But yeah, we got news here in a minute and a half. Just finishing euro dollar, and I'll be done. I got a couple others, but I'll look at them later. Yeah, so that's still my favorite setup, the 1.1611 level down here on the 1 hour. If I look for something in this little leg up here, probably not, because it's just a lot of small choppy candles. It's moving up, and this is the origin of a move, but I don't really have anything demand zone worthy. So I'm not really that interested in that area, right? It just doesn't look near as good as this area does. Plus, look at the volume spread coming out. Nothing, non-existent. So that's nothing more than just a little bit of retail traders dancing around. And ultimately, there are stop losses under here. So the way I see it, the big banks at some point will probably drive price down, collect that liquidity, drop it into my demand zone for which I have confluence, and then I'd be looking to buy on an engulfing bullish engulfing candle as long as I get the volume. Volume is key. Volume is key. So that's what I'm looking at for euro dollar. But yeah, having said that, looks like it's about news time. Let me make sure I got my goodies up here. Goodies. We's goodies. I'm good. And I'm definitely ready for that. So 5 minutes, 10 minutes, we'll be back. We'll be right back.
All right. My vlogs. Good morning.
Morning, everybody. Well, good morning, everybody. Good morning, traders. It's about 4 a.m. Central Standard Time here in Kansas City. Good morning to you over in Europe. Hey, it's Monday. Let's do this. Welcome back to Forex Fire, your go-to source for the latest market-moving news and analysis. Let's dive into some key developments from yesterday's economic calendar and what's ahead for today, keeping you locked in and ready for the trading week. Geopolitical tensions and market sentiment. So the Forex markets are treading cautiously this morning as traders are awaiting the Ukrainian President Volodymyr Zelensky's high-stakes meeting with U.S. President Donald Trump later today. Over the weekend, U.S. Special Envoy Steve Witkoff revealed that Trump and Russian President Vladimir Putin agreed on potential security guarantees for Ukraine. Though notably, the deal does not include NATO membership, a key sticking point for Moscow. Reports are suggesting that the U.S. may pressure Ukraine to cede Crimea and abandon NATO and ambitions to end the war. I believe it was Luhansk and Eastern Donetsk was part of the territory that they're looking to try to claim. So we'll keep an eye on that. But yeah, this geopolitical uncertainty has kept risk appetite in check, with the U.S. stock futures dipping slightly and the U.S. dollar index, the Dixie, hovering just below the 98 handle after a soft close last week. So meanwhile, gold is staging a modest rebound above the $3,350 per troy ounce level, supported, of course, by falling Treasury yields and Fed rate cut expectations, though a stronger U.S. dollar and cautious optimism around Ukraine talks are capping the gains. So just looking at the rundown of some currency pairs here, Euro dollar, U.S. dollar pair is holding steady near the 1.17 level after last week's gains, with traders eyeing Eurozone trade balance data later today. More a yellow folder. We don't really have any red or orange folder events, so it's just nothing more than a few pieces of yellow or lower end, right? But yeah, a break above the 1.1789 level could signal further upside, but for now, the pair does remain range bound. British pound, U.S. dollar is consolidating around the 1.355 level ahead of Wednesday's UK inflation report. The pound found some support after last week's better than expected GDP data, but all eyes are on whether the Bank of England's gradual and careful rate cut stance holds if inflation remains sticky. The U.S. dollar, Japanese yen currency pair is flat near the 147 handle as the yen struggles amid mixed signals from the Bank of Japan. While Japan's Q2 growth did beat forecasts, political and tariff risks are clouding the BOJ's rate hike timeline. Commodity currencies, looking over at the Aussie dollar, U.S. dollar pair, it is edging higher above the 0.65 level, buoyed, of course, by the upbeat Australian jobs data that reduced bets on an RBA September cut. Moving over to the New Zealand dollar, U.S. dollar currency pair, it climbed to the 0.5935 level ahead of the RBNZ's expected rate cut to 3% on Wednesday. So that, as far as I'm concerned, is going to be one of the bigger red folder events for the week. So we'll definitely keep an eye on that. Moving over to the loonie, we got the dollar, U.S. dollar, Canada dollar pair. It is steady near the 1.38 level as oil prices wobble and traders await Canadian CPI data tomorrow. Commodities, moving over to commodities and some key data. Gold rebounded from a 2-week low to the $3,350 level, as mentioned, drawing support from Fed cut bets, which now prices the cut at 85% for September. And I do believe that's down because it was 91, 92% last week. So a little bit of a modest decrease. However, hotter U.S. PPI and retail sales data last week tempered expectations of aggressive easing, keeping the bulls in check. Moving over to oil. Oil dipped to $61.80 per barrel as traders weigh potential Ukraine peace talks against Trump's push for Arctic energy expansion with Russia. And that's a move that could flood markets with untapped reserves. So we'll have to keep an eye on that. So yeah, today's watch list, again, is just more so some yellow events. Eurozone trade balance for June. That could potentially add some volatility to the euro. So we'll keep an eye on that for sure. Trump-Zelensky meeting, of course. Any signs of a Ukraine peace deal or escalation will ripple across risk assets. We've also got Fed speakers and Jackson Hole prep. So with FOMC minutes and Powell's speech later this week, traders are going to be fine-tuning the rate cut bets. Jackson Hole Symposium, I believe, is on Friday.
Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
Hey, we're back. We're back.
All
We're
right,
back.
right.
Did it cut off right after my news piece, or did that get cut off too?
That was the very end of it. It seemed like.
Okay. Well, I was done by then anyway. Got the important points out.
Right.
Good deal.
Hope you
Good
guys
deal.
enjoyed that. Nice.
Yeah.
Nice. As always, you always crank the news piece, right? So that's awesome as usual.
Yep. Splash a little water on the face and get rolling, right?
Right. Chat, if you guys got any markups or charts you want us to go through, please let us know. Alex, did you want to jump in and kind of get
I'm
going?
ready.
Show us
I'm
what
ready
you got.
to go.
Okay, cool. Let's see it.
We're about to get a lesson
Awesome.
today.
Yeah, let's check it out.
Let's get my charts going. Okay, cool. So there's a bit going on here, but I'm going to walk us through it so it'll make a whole lot more sense in just a few minutes. As I said previously, I like to trade Euro USD. I'm on that right now, not in a position, but obviously looking at it. Now, I like to scalp, so I'm looking at 2 time frames, more for a confluence point of view rather than hopping in on the 1 minute and the 5 minute. But the 5 minute just gives me a little bit of a greater edge, especially when looking at the overall trends. So on the left-hand side of my screen, you're always going to see the 1 minutes. And on the right-hand side of my screen, you're always going to see the 5 minutes. And that's the exact same for these two up here. I always go vertical, so across. So this one here is USO USD. So that's oil. If you looked at it from a WTI chart, you would see the exact same stuff. However, I just really like the 8 cap charts. It's just something that I've always done and I've always used. So I am quite familiar with them. And again, here's my 5 minute chart and here's my 1 minute chart from there. So if I just bring this down so we can have a better look at what's going on over here, I can talk about some trades that I could have hopped into but didn't, and everything else that we're looking at from here. So first things first, what I like to do is just mark out the first half an hour of what I call the London Open, which is my 5 p.m. here. You can see it says 1700 down the bottom, all the way to 1730 or 530. And that's basically this grey box that you can see here that I've just highlighted. This is just giving me an opening range. What is it doing as London starts to open its doors and traders start to flood into the markets? Are we going to get a bit of a range? Are we going to get a massive surge, more like what we saw through here, quick downwards turn? What are we going to see? And from there, I basically extend this out through the entirety of the London session. So this will just get bigger and bigger and bigger and bigger. Now, I am not interested in anything that happens in this area here. Anything that happens within the opening 30 minutes, the range that we have, we're not going to be touching. Now, there's so many different reasons for that, but I'm leaving any liquidity or any areas that are in here to just get caught out. Essentially in here, especially being a retail trader, this is where your liquidity is going to be. This is where some FVGs are going to be. This is where the markets are going to target. And in here, things can just get a little bit crazy. So I'm just basically mapping out an entire area where I'm going, hey, I don't want any of that. That's not for me. What I'm more focused on is what happens outside of these areas, because that, especially with oil, even though you guys said it's a bit of a problem child, you can have some pretty wonderful ranges. For example, this was my Thursday. So even though for quite a long period of time, and this hopped out of the London one eventually, this is the last hour-ish in it, we did retest this range, and have an absolutely wonderful move to the upside before it continues to go off and do its crazy oil things. So that's really what I'm looking for in this section. Now, you will see some random squiggly lines on my charts and thinking, what the heck is that? Basically, these are just like Bollinger Bands, right? We've got our upper and our lower Bollinger Bands. The light blue ones, really, that's what they are. They're just following the tops of ranges, right? That's all they're designed to do here. Say, here's where your bottom is, here's where your top is. That's it. It's pretty simple what we have there. And you'll just see as the session goes on, these will just follow him. The red and blue lines are what we actually want to be paying attention to, which are VWAPs. So if you've not explained them before, I might go into them a little bit later, but I'll just give you a quick, brief overview for now. Got an anchored one here. It starts at the start of London session. And the blue one, funnily enough, it starts at the start of the Asia session. So I've got my daily VWAP, and I've got my London one as well. And these are just going to help me essentially find large areas of support or resistance in the market. For example, if we had a really nice touch through here, this is something that we could have gotten into previously. I'll explain why we didn't later. But we can have a bit of a retest of this area. And if I'm seeing an impulsive or engulfing candlestick, kind of like this one here, we'd like a little bit bigger in the opposite direction. Now I'm starting to look through and want to hop into the market. And then last but not least, I'm wanting to break through these lower VWAP bars. I want that move after that retest to be screaming and shouting at me saying, Alex, I am going to go down. I want to go down. There's no other way that you could interpret that apart from I want to go down. Anything apart from that, especially when we go into a few examples later, as I'm sure we will hop into some trades. I'm usually in 2 or 3 per session. Anything apart from that, I'm just not really entering. So in its essence, we have our opening range. It's our no-go zone. That's where a lot of playing can happen, a lot of liquidity, a lot of build-up, a lot of supply and demand on the 1 minute in there for me. Don't want to touch it. I'm looking to start a trend. Much like what we see happening on Euro USD. And we can see that we have this big move. It's coming up and retesting what's this one? London VWAP. And then we're shooting down. So that is in essence what I am looking for when I'm hopping into the charts. And again, just using the 5 minutes to see, are the VWAPs actually moving? Do I have some movement in the markets? Or is it ranging and consolidating? Because, as Coach Michael said before, trend is your friend until it bends. If the market's bending, I do not want to hop into it. I don't want to hop into a range. I don't want to hop into consolidation. I want to hop into a market that's vibrant, it's alive, much like what's happening here in oil right now and in Euro USD through here. So I guess with that being said, very brief introduction, very quick intro there. Do you have any questions? Is there anything that you guys, first of all, want to kind of quiz me on through here?
So you just
Yeah,
have, so you just have the Bollinger Bands on there and the VWAP. Is that it?
Yeah, exactly. I've got my 2 VWAPs. I've got my Bollinger Bands at the top and the bottom. Essentially, just VWAPs anyway for me. And yeah, that's it. Now I've just got a little indicator that I've made to just map out this range through here, and it goes through.
Yep.
Gotcha.
Yeah, your 30-minute range is kind of what I would call the retail chop zone. So yeah, kind of a similar thing.
Yeah.
I mean, I look at it on higher time frames, but it's essentially telling me, Tiger, stay out. Exactly what you just said.
100%. What happens in the first 30 minutes of the market's opening is, as you said, it's that chop zone. There's so much that can happen in there. So many traders are entering the market. So there's just so many. Yeah, exactly.
Yeah, all the
there's just
impatient
a little
traders who couldn't wait
destination.
to click the mouse, who just couldn't wait to take a trade, who just couldn't wait to do anything. They just jump in, right? And it's like,
Yeah.
step back, All right, the cannon fodder
Exactly.
traders is what it is.
hmm
Yeah,
Yeah,
that's
exactly
it.
right. Wanna
That's
leave
it.
those areas alone because there's not many to be made. You want that like we were seeing with Coach Tiger, those clear, well-defined areas where we're going. I'd rather wait for this because I don't really see anything that is going to happen apart from that. Of course, trades can lose, and I'm going to lose quite a bit, especially scalping. But I like to have that peace of mind looking at it and going, this area it's pretty solid with what's going to happen here. Whereas in here, it's just a bunch of question marks. Essentially, so many things could happen, and I don't want to really bet on low probability trades.
Right.
Yeah.
Makes sense.
So on that chart on
quick,
your bottom. Oh yeah, go ahead.
Oh, my bad. I was going to address the chat here. So what's up, Martin? I see you're in the building. What's up? What's up? And then Tiger, 100% sure, but Maya Vlogs is saying, I have a question on the Prime account. Is there a minimum time you have to hold the trade? I don't think so. Is it? If it is, I missed that.
Yeah, I don't know. I don't think so. I just know that when it comes to news trading, you have to stay out 5 minutes before and 5 minutes after the release. Is that right? Or is it 15?
Right.
I think it's 5.
So,
something like that. So yeah, when those red folder events come out, that's the most important one to keep in mind. Staying out right before, staying out right after, because they just don't want people blowing their accounts. I mean, we're obviously passing out accounts here and there, but a lot of people, the vast majority of people, are going to be paying pretty decent money to jump into a challenge. So some people, I think, look at that as, well, this sucks. They're putting too much rules on. Well, they're putting the rules on to protect us from ourselves, right? When we get into a challenge account. But yeah, as far as outside of outside of the news events, I don't think so. We might have to clarify that.
Yeah,
so maybe give us some time.
We'll double check for you on the stream, Maya, for sure. And yeah, I think I might have said this before. Coach Tiger is absolutely right. Like it seems like it's a lot of rules, but it's in actuality, it's not, right? These are what I would call standard rules that if you manage billions of dollars that you would want to see, right? Like 6%, 8, maybe 10, depending on where you're at, but you don't really want to be investing into something that's going to lose you more money. Quick funny story. A group of traders, I'm not going to say their name or the company, but they reached out and this and that, and they were like, hey, like we're looking for like a news type of thing because we keep getting our positions blown or like news. And I'm like, oh, like what is it? Like, do you have a bot or manually trading? Like, oh no, we have a bot. I'm like, oh, okay. Automatically when I hear that, I'm thinking this isn't going to go well. But long story short, these guys tell me that their account, the reason they're really looking is because their account was down 90% and they had to tell their investors to top up. I'm like,
top up? Oh boy.
90% top up. That's what you're going to call it? You basically mean to say you blew the account and you want them to redeposit their funds. That's what you're saying.
Yeah.
Right?
That's funny.
Right? He tried to word it nicely, right? Tiger,
you got to give him
the
A for effort
approach.
Yeah. That's it. I need you to quantitatively ease my account.
Yeah. I'm like 90%. He's trying to basically say it wasn't that bad and they can come back from it. It doesn't normally happen. It doesn't matter how many times it happens. It can happen once and you're done. You're cooked.
Yeah.
Right? You're not going to I'm not investing into anything that was down 90%. The only way that I would invest into a company like that is if I literally wanted to lose $900 of my $1,000, right? Because that's for sure it's going to happen.
If you're a masochist.
Right?
If you're a masochist.
Yeah, or sadistic or something. Like, seriously?
Yeah.
Right? But moral of the story is news trading is a no-no. Like, right? Like, just stay away from it. I think I might have mentioned this too in the past, right? As far as I've spoken with tons of prop firm owners, and literally majority of the traders who lose their account is doing news. They get baited into this whole volatility, price action is moving, you got some action, and they blow their account. Majority of them blow their account during news, right? So my rule of thumb is literally I'm out 15 minutes before, 15 minutes out after. That nice 30-minute window, you know what I mean? That's enough for things to kind of settle down, and then I'll enter into it. If I can't wait 30 minutes, I shouldn't be in that trade anyway. Period.
Yeah. And that's not just Hola Prime. I mean, I've studied up on quite a few prop firms well before Hola Prime, and you know, we're not doing anything that nobody else, as far as some of those rules, right? The rules that we get yelled at on like Discord here and there, I've noticed, right?
Right.
That's just a standard thing. Like, they're trying to keep you safe, right? Now, I think Hola Prime is a lot safer, right? And you get some chances to get things reset or fixed, right? You get emails whenever you, over leverage or enter in at the wrong time. So that's just there for your protection. It's not to pick on anybody, but just try to keep you. We don't just want you here for a week or a month. We want you here a year from now, 5 years from now, 10 years from now. So that's really why those are.
It's always about refining your trading plan, right? Tiger and I were just speaking about this in the opening market session, right? Where trading isn't one of those things where one day you got it, right? That's just not how it is, right? Like, this is a constant journey that you're arriving at. And the arrival that you're arriving at is levels. There's levels to this, right? So it's a thing where you got to knock out that little addiction gamblers, what I would call junkie need to just click the
gunslinger mentality.
And news is a big thing of it, right? Like, obviously we've all been there, right? Where you just want to trade NFP or the hot news events, and you're there and you're like, you know what? At one point you just got to realize this is not repeatable. You're literally gambling. This is not repeatable. You can't do this again and again, right?
Yeah.
So even I see Tanaka saying, thanks for the advice because I've suffered from worse trading news. Yeah, literally, if you can imagine, guys, if there was 100 traders and they were going to blow their account, 85 plus of them are going to blow their account during news. So what should that say to you? Basic data is telling you, hey, if you stay away from the news, you have an 85% chance of not blowing your account from this one particular thing, right? And that's just one level. Let's say you evolve and you go to level 2. What will level 2 be? I don't know. You like to trade on bank holidays or something where there's no volume, right? You realize a lot of people you get chopped up, pay and swap from there, right? All right, I'm not going to do that anymore. Now you evolve to level 3, and it's a consistent thing of just what I call refining your plan, right? Your execution plan, how you approach the market, and more than anything, your process.
Yeah, and if you ever want to get scared straight, sorry, real quick, Alex. If you ever want to get scared straight, just go to YouTube and type in "trader loses money on NFP" or "trader loses money on CPI relief" or something like that. And there's thousands of videos online where you can watch their account go to zero just like that. In some cases, they owe money to their broker, right? That's all because of the news trading. So that's why we stress it so much and scare people from it. We we don't do it to be mean. That's just the reality of trading. So let the volume settle down, see which way it's starting to trend, latch on at that point, right? So sorry, Alex, what was you gonna say?
That's absolutely fine. I mean, all of this trading is already so hard. You know, the statistics are backed up against you, but when you really look at like the 90% of people that fail, it's silly mistakes like news trading, which is just so avoidable. If you want to do a 50-50 gamble, well, are you going to be here for 6 months? Are you going to be in trading for a month? I mean, you can't realistically sit there and go, yeah, this will be long term. I really have no idea how the news is going to react, and it can go crazy. And I'm going to do this for a year or 6 months or 3 months, but you're not going to be able to. So you want to get in that 10, 15% of people that succeed. a lot of it, just by increasing your chances, is by adhering to these rules. Just by going, okay, these are what Coach Michael said. These are your really basic things. Like, you need to be doing them from the start, because, as I said, the statistics are not for you. They're not at the start, but as, again, Coach Michael put it really well, you're always arriving here. And as long as you fix this thing, then you fix the next thing, and you fix the thing after that. Forex trading is just a 1,000-piece jigsaw puzzle. And then when you finish it, you've actually got 2 more 1,000 pieces to go.
Yeah. That's
just how it is. That's how it is. This is the closest to the most unsolvable. You've never had a puzzle with this many pieces to it.
And if and that's why the rules are there. But you just have to be candid with yourself. I mean, if you can't follow the rules, that's fine. It doesn't make you a bad person. It just means maybe trading's not for you. I mean, we'll just be honest, right? We're transparent here. We'll just tell you that. I mean, in that case, honestly, take your money and go to a slot machine. You'll probably have more fun, because you won't have. At least you can get some cocktails while you're at it. Maybe go get a casino buffet. It would make for a good entertaining evening. That's not to. Yeah, that's just being straight up. I mean, it may not be for you. So if you can follow the rules, because at the end of the day, the market is our boss. It tells us what to do. It tells us when to enter. It tells us when the hell to stay out of the market, right? All because of how we read the charts, the fundamentals, and that kind of thing. We have to be obedient to the market. Otherwise, we're going to get, you know what, shit canned.
Absolutely. Absolutely.
So,
and as you just said, right? Like, one of those things where if you can't follow the rules, right? This isn't a market thing. This is a you thing, right? That thing between your ears, you got to fix that, right? That's where that psychology comes in at, because you should be able to follow the rules, right? That's like having a car, and you're supposed to stop at that stoplight, and for some reason you blow through it, right? Is that dangerous? Yes, it's very dangerous, right? That sign says stop. It doesn't say yield. You have to stop at that red dot, Otherwise, if you blow through it, what can happen? You can possibly get sideswiped, mess up your car, mess up yourself. It's just a different type of accident, right? Like, it's not a physical accident. It's an accident on your account at this point, right? So the rules are there. This isn't one of those times where you get to say, "Oh, the rules are made to be broken." Yeah, but not here. Not here.
Yeah. You might get lucky blowing through that. You might get lucky blowing through that 4-way a couple times, 5, 10, 15 times, 100 times. But you blow through the red light on the market, it'll wipe you to zero just like that.
Yeah.
So I would say it's even more dangerous.
It's a harsh teacher.
Rubik's Cube. That's exactly right. A 20-sided Rubik's Cube is what Webb is saying. That's correct.
Yeah, that's it. That's it.
Absolutely.
And I can't even do the 6-sided one. Is that right? Is there 6 sides? 1, 2, 3. Okay.
It was 4.
1, 2, 3, 4, 5, 6. No?
I guess it's 8. Oh no, you're right. It is 6. 4 round and 2 at top and bottom. You're right.
Okay. See? That's what And I hate math. No, you had me second guessing myself. I'm like, 1, 2, 3. Coach Alex, so back to your chart example on the bottom left. Did I hear you right? Did you say there was an entry there that you didn't take because we were obviously, in introductions and all that?
There was one up here that I didn't take, top left. This one I was talking about didn't quite get close enough to the VWAP line. Okay. Like I physically wanted to see it like touch. However, can see that it did it a couple of times through here. Where it's, this one, is basically right there. I say I want it to physically touch, but if it's about to knock on the door, I'm gonna open it and I'm gonna say okay. Because as we know, Forex is not always a game of perfection. I think you were talking about early on where you've seen some trades go right near your entry zone and then just take off, and you go, if you just moved a little bit further in my way, I could have gotten into something. Obviously, that works both ways, but in the sense of this, if we're looking at it and I was just to measure it through here, it's just like 6 pips. I'm not going to go, hey, for the sake of 6 of them, I'm not going to hop in. However, I do pay attention to how the VWAP is going, right? And I like it to be moving, much more like it is over here on this 5-minute chart. But we can see when we came in, it kind of stopped. We started to slow down around here, and I could see it really losing a lot of its momentum. And now that's going to signal to me that maybe there's a range coming, maybe it's going to consolidate. And again, as I said at the start, I'm wanting something to scream at me and go, hey, I want to move, I want to go. Much like what we can see here almost from the very start with, Euro USD. This is fine. It's still clearly being bearish. That's what I can see here. Whereas coming into this zone, we really started for that half an hour period just to patter out. And as it came in, it came through here, especially if I go into this replay mode and we have a look at it, right? I'm not seeing this surge down. Yes, I can definitely be looking at the London and seeing that move, but I'd like to see them both in conjunction with each other, both moving in the same direction, having a little bit more oomph to it, which is, again, kind of what you can see through here. This one is honestly so far apart, but it is moving. And by the time we started to get into this first half an hour here, I could already see, instead of it petering out, which it's already done, now it's starting to move. That's the big difference for me. So when this came through and it hit here, not only did I not have an engulfing candlestick, right? Just there was really nothing there. This VWAP was just taking its time. So even if I had have hopped in, and remember, I still want it to break through here, so that's where my entry would have been, specifically on this candlestick here. I would have looked for this entry. I would have gone up for my last, market structure, which is going to be up here, my high. I'm going to put it up there. It would look something like this, but I could tell from the VWAP already that that's just a straight line. Yes, the London one is coming through here. It's early days. It's not usually the best indicator within the first hour, especially when you're looking at it through here. It's not the greatest, but I just didn't get anything. I didn't get my engulfing candlestick, and then you can just see it. Just play around. It didn't really go anywhere or do anything throughout here. And as soon as it would have come back up into this area, you're looking at multiple lows basically in the same area, and you're looking at multiple highs. And before then, I would have looked at it somewhere around, before this big engulfing one actually came through, and went, well, it's clearly not going my way. Even when it does break through, it's coming straight back in. So there's a load of reasons there that I would have exited early in small losses, or not hopped in at all, as was the case, because now we've decided to fling ourselves in the completely opposite direction. So that's what we're looking at here. The only one reason just didn't touch the VWAP down here. It just didn't get close enough to it. Otherwise, that could have been a very good trade.
Okay. And do you have a strict risk reward number, like a 1-to-1, 2-to-1 that you shoot for?
It's actually, it's negative. I've got a negative R&R, which is a little bit crazy. That can freak some people out. However, the win rate is 80%. So I've got a high win rate, but the key takeaway there is that I have these smaller R-to-Rs. So I'll stack up a lot of little wins. Yes, it will come through, and that loser does sting, and that loser does hurt. But you've got a very strict system here. You've got a very strict set of rules and procedures, and you should be, if you follow the rules like we were talking about before, reap the benefits of that. So 80%, it's all right. It covers my brokerage fees anyway. So we do well.
Yeah. No, that's great.
Nice.
Yeah, I mean, it's something like that's okay. If you have a high winning percentage, probably be tough for the newer trader to maybe wrap their brain around. But once you, again, like we said earlier, when it comes to like confluences, like I said, on trend lines, if I'm looking at 1 hour, 4 hour daily, we'll always teach to get the stuff into confluence, or obviously go 1-to-1, 2-to-1 minimum. But when you start to really figure it out, hey, it's okay to win a lot, just win a little bit, a lot, because it'll, you'll still have your loss now and then. But long as your P&L's growing, then if it ain't broke, don't fix it. No, that's cool.
Yeah, that's all that matters.
Exactly.
That's all that matters for sure.
I think you're right. For newer traders, scalping can be nerve-wracking, can be a little bit hard. The market does move very fast. You got to be on with it. But some people really don't like it. Some people do, because if you're like me, a bit ADHD, and need to get my fingers actually touching something or in something or looking at it, it just suits me in that way rather than the sit back. Patience has never been my virtue, so I tried to do this instead. I can instead of kind of building a weakness, there's your strength, and go for that instead.
Well, Alex, I'm right there with you. I still like messing around with penny stocks. So, because normally I'm on such higher time frames. I'm coming down to the smaller time frames to try to, provide more content, but supply and demand works the same on all the time frames. But yeah, I'm kind of the same way. I just separate it for me personally from my Forex trading. I'm about to get me another penny stock account, just something to play with after our stream sessions, because it's quite fun.
Yeah, it is.
Get rid of my age.
I'm the same way with my risky account, right? So I'll do the same thing, but have my own account for my degenerate addiction. Like, no, put 20% on this trade. Like, all right, let's go to your teaching account.
That's it. That's exactly right.
It is a smart thing to do.
Seriously.
I love it.
Seriously. Because I used to do it right, and I used to have it in the same account, and I'm like, man, I was doing real good. And then that bug just kicked in, and I got back to break even, or, went lower. I'm like, you know what? I need 2 separate accounts for this. And that is when the gambler's account was born. Right? Yeah. And it's cool though. It's weird because it gets I call it a scratch the itch account, right? So we need to just scratch that itch. I don't have to worry about taking real losses. Yeah. All right, I just gotta take
like
this.
Chappelle show. Chappelle show.
Yeah. Right, take it over there. Get out of here with that. So, but yeah, it's done wonders for my actual main portfolio accounts, right? So it's all right, you don't have to worry about taking those high risk trades or whatever. It's this one isn't all the way there. I kind of don't like it, but it looks so good, right? It's like that chick who she's not good for you, but she's just so, I don't know. Right? Yep. So you just got to have something for that. So, but no, absolutely. She's smoking a cigarette. She got the tattoos. I don't know about this. But man,
the neck tattoos.
Right.
Oh, gosh.
So 100%, you got to have something for it, for sure. But no, I got something similar, Alex. How you got the Bollinger Bands on your chart here? We don't have too much more time, so I guess I'll probably get into mine after the break. We do take that 15-minute break in 15 minutes, and I'll kind of get into all of mine. But I kind of have the same thing, Bollinger Bands on one of my indicators at the bottom. It's called the TDI. And I use it for pretty much that same thing. Like I want price to be contained inside of this area. And when it's outside of this area, that's when I know that it's creating that outside structure, right? So I kind of want to not trade that area. And I got a great example on EU of why you should follow that rule.
Yep. By the way, we do have a poll question on the YouTube chat. If you could remove one thing from Forex trading, what would it be? We got fake outs and stop hunts. We got the Twitter gurus, right? Yeah, so we got fake out stop hunts, Twitter gurus, confusing indicators, or long, boring ranges. So it looks like currently the Twitter gurus and the long, boring ranges are tied for what people want to remove. So, yeah, continue to cast your votes on that. We'll get a final print on that at some point. Yeah, that's always an interesting question. What do you gents think?
100% for me is the ranging. I don't care about the gurus. You know, people been flexing since the beginning of the time. They're always gonna do that, so that we can't help that. But that chop, oh man, that chop gets to my damn nerves. I would much rather take that.
Yeah, you can start drooling on yourself. What do you think, Alex?
Yeah. It depends. There's a specific type of Twitter guru that really gets me, and it's the this is how much you can make if you follow my strategy, and it's usually going to be around somewhere between 5 to 10% of week returns every single week. It's like, you can do this. This is a normal thing. Anyone that says any differently to you is not normal. So then when it comes to people talking to me, for example, I go, oh, no, you want these small incremental wins because it builds up over a long period of time. They go, this guy over here has shown me his MetaTrader account and he's making 10% a day. And I'm sitting there going, this guy, don't trust him. Like he's scammy. If he was doing that, he's on Wall Street. He's more famous than Warren Buffett. He's got a movie named after him. Like, why is this guy selling his course for $10 on Twitter? If he's making 10% a day, that's crazy.
Yeah. Well, that was my answer. By the way, it was definitely the Twitter gurus. And I just say that not necessarily for my sake. I say it for the sake of all the newer traders, the more novice traders, because they're getting fed a lot of this line of BS. And we talk about this periodically on here, the fake gurus. But, yeah, at the end of the day, it just sucks to see so many people fall for all the flash and the jewelry and the Lambos and the this and the that, when half the time they're either renting that stuff or they've got rich friends that are allowing them to do their marketing from their house. And, at the end of the day, they don't really show their statements. So, exactly. But only showing their winning trades. So ignoring all the fake or all the ones where they lost. I think it's liberating to share a loss. I've done it on the Discord. I do it on here all the time. That's one of the awesome things about working for such a transparent company. We're not going to sugarcoat anything. This stuff is hard. Our job is just to try to simplify it. But when we have a loss, when I have a loss, I love showing it because I learn. January will be my 12th year. So I still lose after a loss. And the funny thing is, I don't know about you, Alex or Michael, I think we talked about this. As soon as I have a loss, I know immediately. My gut immediately tells me why I made that loss. And it's usually because something that I overlooked, that I thought, maybe I should wait. Maybe I should do this in my fun money account, right? Maybe a demo account, but it's usually something that has to do with volume or whatever structure. But yeah, it's just, I learn more from my losses way more than I win from my winners. So, that's what we try to teach here. And Yeah, we're not gonna be showing fancy Lambos or any of that kind of stuff. We're just gonna tell you the stuff's hard, but if you stick with us, just get 1% better every single day. It does stack up. That's the ripple effect, the compound effect. One of the best books I ever read by Darren Hardy. He's the founder of Success Magazine. So if anybody's looking for, in fact, I'll probably put that in the Discord later. I have to put a book submission in there anyway. But yeah, just small things every single day. It's cliche, and it's boring sometimes to hear cliche things, but that's one thing that's cliche that is so true. Just quit trying to make 10% in a day, like Alex's story there, 10% a week or a month. I mean, the reality is, I don't play with those numbers, but they say if you're making something like 2 or 3% a month, you're already way better than most people. So, quit worrying about a strict percentage, quit worrying about a strict dollar amount you have to earn or amount of pips you have to earn or points, depending on the asset you're trading. It's all about the journey. Trading is a journey. It's definitely doesn't happen overnight, but if you kind of take some stress off and realize I just need to get 1% better. I just need to maybe learn how the Bollinger Band, like Alex uses, how that functions, how Michael's W and M structure works, how that functions, maybe how supply and demand works, maybe how to qualify the zones.
Right.
Just learn 1 or 2 things like that a day, and it really does. It really stacks up over time. And plus it's a lot more fun. You're not overwhelming yourself. It's not like you're cramming for a finals, right? The university finals or high school finals. It's just 1 or 2 quick things every single day. So, but yeah, that's why I picked the gurus, because they drive me up a wall.
Nice. Well, cool. I know we got to take the break in a minute. I do see Tanaka wrote a question here. What about lot sizing, coaches? How do you decide the lot size in relation to risk management? And also, should you have a fixed lot size for all trades, or should they vary according to the situation? Everyone, well, a lot of people have a different take on this, but mine is very firm. In my opinion, you should never risk the same amount that you on every trade, right? It should always be in relation. And I've shared this before, but I'll share it again. Back in, and we can get my screen shared up. I actually already have this. I get this question a lot, so I already have like a sticky note for this, right, with some examples. And then Tanaka, it looks like you are also in the Discord, so I'm also going to repost this in the Discord and tag you in it. But yeah, this is what I go by, right? So Forex pairs and then the indices are a little bit different, but let's kind of start with the Forex pairs, right? So if you did or didn't know, as you can see here, 0.01 is 10 cents, 0.10 is $1, 1.00 is $10, and then 10.00 is $100, right, per pip. So in relation to risk, as you can see on the next part here, let me do it like this. Right. So, okay, cool. So this is just one of those things where you kind of got to get good at this formula here, which is, this is my simplest formula ever, right? It's your account size times your risk percentage, which is your risk amount, and then you want to divide that by your stop loss. So again, in this example, let's say hypothetically speaking, you have a $100,000 account, you have a 25 pip stop loss, and you want to risk 1% on, let's say, Euro USD, right? You're going to do $100,000 times 1% is going to be 1,000. And to be totally honest, you should already know this first part. Like, you should already know what 1% of 100,000 is. Yeah. So you really don't even need to do this. You can really just skip that part and get to the next part, right? So you would do $1,000 divided by your stop loss. So right here, Tanaka, is where your question is answered. It should always be your risk amount divided by your stop loss every time, right? Always your risk amount divided by your stop loss. So if we do this math, 1,000 divided by 25, of course, is $40 per pip, right? And then according to this example up here, to put $40 per pip, N would be 4.00. Obviously, once again, is one. I'm sorry. That was on the indices. Indices are a little bit different. I want to go purely on Forex pairs, right? So 10.00 is $10 a pip. So clearly, $40 a pip would be 4.00, right? So again, to answer that question, you always just want to just divide it by your stop loss. So it doesn't even matter what your stop loss is. Again, another example. Let's go with this one. Let's say example 2. $100,000. You got a 20 pip stop loss, and you still want to risk, let's say, 0.5% on AUD CAD. You do the exact same math problem. It's always the same math problem. Your account size times 1% or times your risk, whatever you want to risk, divided by your stop loss. Right. So in this case, again, $100,000.
When you say 20 pips, you mean from the entry to the stop loss, correct? From the point where you enter the trade? Right.
100%.
Yeah, just wanted to clarify that because that's definitely important.
Yeah. Because I know some people do fixed stop loss. I don't do that. I don't think that's the best way to do it. It should always be different. Right. So my stop loss will always be different. It's anywhere from 15, 20, 25, 30, 35, 40. Depending on the time frame, it might be 60, 70, 80 pips if I'm trading on the 4-hour chart or something, right? But that stop loss will always be different. The only thing that would be the same is this damn math problem right here. It's the stop loss. The risk divided by the amount of pips. And that's going to give you how many you should be doing per pip, right? And then you're just going to put that, basically, you're just going to do that same math with this part right here. Right. So again, just coming back to this example, right? If we have $100,000 and we have a 20 pip stop loss and we want to risk 0.5% on AUD CAD, we got 100,000 times 0.5%, which would be $500. Right. Remember, so that's step 1, which again, you should know already, but let's say you didn't. Right. The next step would be, okay, I know I'm risking $500 and I got a 20 pip stop loss. Okay, great. 500 divided by 20 is $25 a pip. How would you put that into the lot size? Basically, as I mentioned earlier, $25. Whoops, is this one, right? So if 1.010.00 is $100 a pip, which is too much, you want to be here, right? Which is 1.00 is $10 a pip. So if you wanted to do $20 a pip, you would clearly do 2.00, and half of that would be 2.50. Right. So
okay, and by the way, actually, Michael, you did already post that. So for everybody that's on Discord, August 5th, it looks like, is when he posted that. So if you just simply go to the strategy and education tab, and then under that, you'll see resources, hashtag, and then the resources. Yeah, you could just click on that, and then you'll see on August 5th, he actually posted what he's just showing you now.
Yes.
Is that right?
Yes. This is paramount. Because it doesn't matter how good your strategy is. If you can't do proper risk management and get into the trade right, nothing else matters. Nothing else matters. We could give you signals from here until the end of time, perfect 100% setups. If you can't do this part, you'll mess up. It's simple.
Yeah, and
execution is
first. Yeah, and just in case any of you are not on the Discord, just simply go to holaprime.com, and literally at the top you'll see Join Discord. There you'll see a button. So click that, and then it'll show a button that says Accept Invite. Just simply click it, and then you'll be on to the server, I believe. I think that's it's just as simple as that, right? Steps. So, but yeah, we post chart markups, resources, all kinds of goodies on there. So definitely stay on top of that as well. You can always ask us questions there, even when we're outside of our streams. And then we jump on there and help you guys out as best we can. But with that, gents, it looks like we're going to take a quick 15-minute break. Go get some caffeine, get me some yogurt, slap myself around a little bit. I'm going to look at some more of these chart setups too. So we'll be right back here in 15.
Sounds good. All right, guys. See you in a bit. Take it easy.
All right,
guys.
Hey, hola amigos, I'm Michael Keller, and I'm one of the trading coaches here at Hola Prime.
But more importantly, I'm just a regular guy who turned trading into freedom, and I'm here to help you do the same. So this is a glimpse into who I am in front of the screens and beyond the charts.
See, a strategy will get you in the trade, but mindset keeps you in the game.
I started trading back in 2012, and honestly, I lost more than I won in the beginning, but every loss taught me something. It wasn't about having the fanciest indicator. It was about mastering my mindset.
Living in Mexico has taught me to slow down, breathe, and be present.
Trading is what I do, but it's not who I am. I'm a dad, a husband, a traveler, and a student of life. And all of that makes me a sharper trader. When I'm in flow outside the charts, I'm in flow on the charts too.
This game doesn't reward speed, it rewards skill.
Listen, everyone wants to flip $100 into 10,000. I get it. But be consistent, focus on execution over excitement, risk small and learn fast. And if you ever feel lost, reach out. That's what we're here for.
Well, guys, that's a glimpse into my life, my story, and who I am, not just in front of the screens, but beyond the charts. I hope to see you in the session soon, and let's grow together. One day, one trade, one lesson at a time. Welcome to Hola Prime.
Hola Prime, trade with transparency.
Coach Richard Krugel is a leading force in the world of trading, recognized for his sharp technical analysis and dynamic market strategies. With years of hands-on experience, he has not only mastered the art of trading, but also dedicated his career to educating and empowering traders at all levels.
My $1 million advice to you would be, hello everyone, I'm Coach Richard, and I'm truly excited to join the incredible team at Hola Prime. It's an honor to be here, and I can't wait to contribute, collaborate, and grow with all of you. At the Hola Prime Academy, we empower traders by sharing strategies that actually work and deliver results time and time again.
Coach Richard's expertise spans multiple asset classes, and his in-depth market insights have helped countless traders refine their strategies and achieve consistent profitability. Known for his clear and practical teaching style, Coach Richard transforms complex concepts into actionable knowledge that traders can apply in real-time markets.
You can also catch me doing live trading on Hola Prime TV.
As a sought-after instructor and mentor, Richard has left a lasting impact on the global trading community. Now at Hola Prime, he brings his wealth of experience to equip traders with the tools and confidence needed to navigate the financial markets with precision. When you learn from Coach Richard Krugel, you're gaining more than just market knowledge. You're accessing the mindset and strategies of a trader who knows what it takes to succeed. Welcome to Hola Prime, where expertise meets opportunity.
My $1 million advice to you would be that trading requires skill. Never stop learning. The market constantly evolves. Let's conquer the markets together.
Hola Prime, trade with transparency.
Everybody, my name's Tiger. I'm a coach here at Hola Prime, and I wanted to give you a quick little glimpse into who I am, both inside and outside of trading. So let's check it out. So I've been trading now for going on 11 years, and that first decade of my trading was all about technical analysis. And really over the last few years, though, I've really dug a lot deeper into fundamental analysis and sentiment analysis, seeing how the bigger banks and institutions are trading so I can ride their coattails, so to speak. They're the ones making the money. So I've just kind of looked at trading like Edison and his light bulbs. He's went through thousands and thousands of different prototypes in order to find the one that worked. Look, one of the things about trading that people get wrong is they think it's an overnight get-rich-quick scheme. So, for me personally, all the hard work was done well before I even picked up trading, and it all had to do with reading some good books. So, one of my favorite books right there, The Magic of Thinking Big by Dr. Schwartz. And as you can see on there, the chapters, best way to read this book is read chapter 2, 12, and 13, and then turn around and read the whole book. Powerful, let me tell you. And I'm sure you caught that above my bookshelf. One of my biggest things that I love doing is bowling. I'm a very competitive bowler. Bowled a lot of perfect 300 games, so they give you these nice little trophies whenever you bowl a perfect game. Got another one for an 800 series, basically bowling 3 games of 800 or higher in a 3-game series, so it's like a 250 average. Pretty good stuff, but competed in national tournaments, state tournaments. I've won a lot of them, so bowling, that's one of the top hobbies that I have. Outside of that, I love singing. I like to go and belt some tunes, whether it's karaoke or just singing in my car, some carpool karaoke. But other than that, listen, on the weekends, I love nothing more than just to hang with my girlfriend. She's an awesome, incredible woman, and she kind of balances me out because she sees how hard I focus on trading. So it's just a very good reset at the end of the long, hard week of trading to just get away, just step away from it all, go enjoy each other's time, and prepare for the next week. So that's a bit about me. Just let us know how we can help. Just remember, it's not a sprint, it's a marathon, okay? The basics of trading are quite simple to learn. It's just all the nuances that take a while to really master. So just keep that in mind. Don't overwhelm yourself. We'll take your hand. We'll lead you to where you want to go. Like I say, just one step at a time. So with that, have a wonderful day. Look forward to seeing you in a session soon.
Hola Prime. Trade with transparency.
Hi, I'm James. I'm one of your coaches at Hola Prime. I've been trading for about 30 years. Can you believe it? Seems like an awfully long time. But in that time, I've learned a lot about trading the financial markets, and I've learned the best way to trade the markets. By dawn, I chase waves, chase stocks, and sometimes chase my own sanity. Trading, like surfing, is all about timing. Wait too long and you miss the move, and jump in too early and you just wipe out. If you're a new trader and you're struggling with your trading, I think you've come to the right place. I'm really looking forward to meeting you and helping you with your trading. I'm approaching a stop street now, and I'm going to have to stop. Emergency brake if there's traffic coming. And that's one of the things you've got to learn in trading as well, as how to keep safe. And it's one of the main things that I teach in my trading philosophy is risk management, which is not taught very often. Trading is a bit like driving a car, really. You've got to have a license, and in trading terms, having a license is like learning how to trade. And once you've learned how to drive and got the license, learned how to trade, you've got to get good at it. And my philosophy is to teach traders how to trade properly using the tools and techniques that they should be using. My specialty is swing trading, and it's a bit like riding the waves. I've been a surfer for a very long time, and swing trading is not much different. You've got to find the sets and catch the right wave and get out of the wave when it's time. A lot of people ask me, how did I get to where I am today? How did I learn how to trade? And how can they get to where I am themselves? I think the best answer to that is to get educated, learn how to trade. And there are all sorts of resources out there for you, including fantastic resources here at Hola Prime.
Hola Prime. Trade with transparency.
Hi, I'm Paul, one of the coaches at Hola Prime, and this is a little insight into who I am beyond the charts. I started trading 5 years ago. I made some money, sure, but I also made mistakes. a lot of them. As I progressed though, I realized it's less a game of chasing green and more a game of enacting discipline. As a coach, I try to help traders focus on the process, how they structure their approach, not just on the charts, but in their heads. Everyone wants to 10x their money overnight, right? But real growth, it comes from small, smart, and consistent moves repeated over time. Trading is a journey, so patience is always required, but I am here to help you grow, so don't be afraid to get help. Improving your success rate is what we do.
But after a day of trading or an afternoon of coaching, getting away from the ever-evolving price action of chart setups is a must, as the outdoors can reset your mind, whether it's taking my dog for a walk for 30 minutes or gently strolling on the beach after a winning trade. I never allow myself to get lost in the charts. Stepping back gives me perspective, and perspective is what makes me a good trader. I'm always looking for that balance in everything I do. And if you can achieve the same, you'll soon discover it unlocks so many doors.
So that's my deal. What's yours? Hopefully we'll see you for a coaching session soon where we can level up your skills one profitable trade at a time. I'm going to place a trade.
Hola Prime. Trade with transparency.
Hi, I'm Sam, one of the coaches here at Hola Prime. And in this video, I'm going to give you a short glimpse into my life beyond the charts. Outside of the charts, I love to cook. Anything with fresh local ingredients has a thumbs up for me. And when the weather's good, I like to go out, have a quick jog, keep myself healthy. I started trading almost 15 years ago, and believe me when I say, it wasn't an easy journey. There was a lot of ups and downs, mostly downs at the beginning, and it took me, I would say, almost 10 years before I could actually call myself a trader. Personally, I like to travel. I like to go to different places, see different cultures, meet new people. I also like a good spa day, just sit there by a pool, relax, get a massage. You can see from the screens behind me, it's just a lot of stress, a lot of digits, a lot of moving, a lot of fast moving markets. You can't spend your whole day in front of a screen. You will burn out, and sadly, you probably won't be as successful as if you just relaxed a bit more.
Hola Prime. Trade with transparency.
Hey, I'm Troy Epperson. I'm one of the coaches at Hola Prime, and this is a little glimpse of me outside or beyond the charts. Outside of trading, I play golf with my son. As you can see, I have a laptop and multiple screens. I've been trading for about 15 years on my own and about 25 years before that, even with a lot of interest in the market. I've realized over time that it's not about the strategy or the method. It's about implementing whatever that strategy or method is, which is super, super important to become consistent as a trader. Everybody wants to get profitable and make thousands of dollars a day, literally overnight. But it's about taking those small incremental trades just over time, taking the same boring pattern over and over again that creates that consistency and develops a discipline to make money trading currencies, futures, or stocks, or whatever you're trading. Golf is great because the parallels with trading are immense. Discipline, doing the same thing over and over again, getting your setup correct, knowing when to do a layup and when to actually go for it. All of those things apply to trading. Balance is super important and is the edge when it comes to trading. We want to be consistent, but at the same time, you've got to be patient, and you need to be able to reach out and ask a coach a question and never feel guilty about doing that. And there's no
bad question. Every question is a great question because it helps you enhance your intelligence and your knowledge of the market.
Well, that's a bit about me. I hope to see you soon in a live trading session. And remember, we're just looking for one good trade. And once we find that one good trade, we're going to do it again and again and again. I'll see you then.
Hola Prime. Trade with transparency.
Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are unpredictable.
Yeah, buddy.
We're back.
All right.
Back in black.
I see we got Webb saying, how do I join our community Discord? Yeah, we can drop the link in the Discord. I'm sorry, drop the link to the Discord in the chat for Webb. That would be awesome. So we can get them on in there.
Yep.
But cool.
So, who would like to take it away? Michael, were you wanting to get into your goodies?
Yeah, it is about that time, isn't it? It's about that time. Got a cool few things to show over here. So let me reshare my charts here. Cool. So, okay, here we go. Cool. All right. So, funny enough, I was on with Tony, and we were talking about how there's a thin line between gambling and trading, right? And I said the line is so thin, it's hard to tell where one ends and the other begins, right? And it looks something like this. A physical representation of it.
Yep.
Right. There's barely any space between this. You got to zoom in just to even see it. Right. That line is paper thin. Right. And we were just talking about how if you have edge, right, and your edge is there, now you're actually trading. But if there's no edge there and you just jump in early, prematurely, you know you're supposed to cut your loss and you haven't, guess what? You have now crossed over from trading to gambling. They seem synonymous, but they are not, right? So that's why I got this up here. Well, cool. Let's see what we got here. I'm gonna go ahead and delete this. I am looking at this setup, actually. Oops, I didn't mean to hide that. We'll drop it. Okay, there you go, Webb. So we just dropped the link to the Discord in there for you. Thank you back in. Cool. So, let me find something because I do want to explain my style to you here really quick, Alex. So you're not kind of how you did. Got a little bit more indicators and stuff on my chart than you do. Tiger knows all this stuff already, so more or less explain it for everyone in the chat and also for you.
I'm excited.
But let me find something that I can just really show really quick. I don't have to go through a whole dissertation of what's going on here. All right, cool. So here it is. So in essence, I am trading the market maker cycle, right? And it looks something like this. So I got about, I say 8 trades, kind of what I'm looking for. Some of them are kind of the same, but I just broke them up into different categories, basically. So in essence, I'm looking at this diagram right here on the right-hand side where you can see this PL, which is the peak low, right? And I got this level 1 move here, which is my main setup, which is basically what Nazi's doing right now. I just don't really like to trade it in this session. That's what I don't like. I'd much rather wait for a little bit later. So we'll see. Might take a small position on it. We'll definitely see. But yeah, I'm interested in trading this level 1 is what I call. So I don't trade the peak lows at all. And I don't trade the peak highs at all. I stay away from those. And I'm only interested in these level 1 moves and level 2 moves, right? So level 1, I'm looking for what I would call my master trade or my money trade setup. Level 2, I'm looking for like some type of MOW structure off the 200. Another variance of that or variation of that would be the HB, stands for half a bat off the 200. And then, of course, the HNS, which is the head and shoulders off the 200. So in essence, kind of the same move, but a little bit different. It's the same move in level 2. The pattern just looks different, right? But I did break them up into 3 different ones just to get that hard, concrete data. And then lastly, of course, is the move coming after that, which is this level 2 move, which is the level 2 money trade. So the money trade for me can happen in level 1 or in level 2. The only difference is if it's in level 1, the 1350 has crossed, but the 5200 has not crossed, right? And then level 2 would be the 5200 has crossed. So let's kind of get into what that will look like on the actual chart here. Let me reshare my screen. All right, cool. So that will look something like this in essence. So the reason I like this right now, and I probably will or won't take this, it kind of depends, we'll see. But in essence, that M top here. So let me kind of just redraw this, right? So when I'm looking for something like this, I want to see it break that structure, reach this area, and then drop. This is actually my favorite setup. This is actually an A+ setup for me. I will take this majority of the times. I'll just put PH for peak high. Whoops. Let me make this a little smaller. It's kind of large. Put it at 18. Cool. All right, so I'm looking for that. And then the main thing is I am looking for this area right here to confirm. Right. And for me, this is that level 1. So I got 1350 cross. For me, that's L1. And just to give you a little bit of context, even further, I have 2 things going on here. One, obviously, is at the chart at the top, and then I have an indicator at the bottom, which is the TDI. So on the chart, and I guess I'll type this out for everybody as well. I'll just put chart up here. So I have 4 EMAs on here. One you can't see right now, but I'll zoom out so you can't see it. The red one is the 13 EMA. I guess I'll put baby blue. Is that baby blue? Yeah, baby blue is the 50 EMA. And then the white one is the 200 EMA. And there's another one, I'll just put dark blue. That is the 800 EMA. All right, let me zoom out so you can see that one. Yeah, so it's this one down. It's all the way down here. All right, so we got this 1 EMA, which is the 800. We got this white one, which is the 200. We got this blue one, which is the 50. And then this red one, which is the 13. All right, so that's what I have on my chart. 2 other things to kind of point out is this right here. This is what I would call the ADR, which is the average daily range. So typically I'm targeting the average daily range high or targeting the average daily range low. Like if I were to short this, I'm targeting this area. Oops. Man, why is it doing that? Okay. I'm targeting this area right here. That's what I will be targeting for this short. Right. And then I also have this here, which is these like blue dash lines, which is basically yesterday's high, yesterday's low. So kind of the same thing, except that they look the same rather as far as pricing, but slightly different. Again, one is the average daily range, where you think the highest daily range would go, the lowest daily range should go, and then of course the blue trace will be yesterday's high, yesterday's low, where it actually went. All right, so just a little bit of context on that as far as, and if you got any questions, Alex, just let me know, because it's kind of a lot, to be honest.
Yeah. Or I'm absorbing.
Yeah. Okay, just to start, it's a lot. Me and Tiger went on countless sessions, so he knows this. He knows my strategy like I do down there at this point.
Pretty close.
Right. So so yeah, this is what I will be looking for on the chart. And then down here is what I call is the TDI. So let's kind of move this up here a bit. This is the TDI, right? TDI, which is the Traders Dynamic Index, right? On here, similar to you, I have some Bollinger Bands, right? Go figure. I got some Bollinger Bands here, which are I guess I can put it on here like this. Let me see, maybe I can put it on here like this. Yeah, okay, so we got the blue is the Bollinger Bands. Wait, yeah, I think that's right. Bollinger Bands. What else we got here? I guess this purple, right? This purple is my RSI line. This maybe pink, red. I don't even know what color it is. Red, pink. I'll just put. This is the signal line. And then this yellow is what I call the market baseline. Right, and then lastly is this, I'll put dashed white, is what I call the static. Right, so that's what the TDI is down here. So you'll see me constantly going back and forth between, Coach Mike, was your setup only on the H1? No, actually it's not. I like to see it on the H1. Ishan, I like to see it on the H1, but I always do my higher time frame confirmation on the H4. And then sometimes I'll drill down to the 15 minute to see the pattern off the 15. Maybe I can get a better entry, but no, I think you mentioned it earlier as well, Alex. I love the H1. It's like my bread and butter. Yeah. I have all my pairs at the H1 and I just click up or down depending on what I'm trying to see. Mm-hmm. So I hope to answer your question. Well, yeah, so the bottom is the TDI, right? So that's kind of what I'm looking at and what these lines all represent. And all of this to kind of tell me a story, right? Like I always say that the chart and the TDI need to tell me the same story. They need to agree, right? So if the chart's telling me yes and the TDI saying no, it's a no. If the TDI saying yes, but the chart saying no, it's a no. They're both saying no, it's a no. They're both saying yes, it's a yes. Just really as simple as that. Right, but coming back into what I'm looking at here on NASI is we got this, just how we have this diagram here, this peak high, break, and retest. Well, let me use this one. Once it breaks this area, I want to see it come back and retest this zone for the shorts. And you can probably see this already on the charts, but it's pretty similar. Yeah, right? Comes here, it breaks this zone, it comes back and retests this zone, and I'm looking for that right there, right? There's it's not a coincidence that this is pretty much the same area. Maybe maybe I should do a zone instead, right? So something like this, right? Maybe a little bit thinner, something more like this. So yeah, this would be it, right? As far as that peak high, right? So just put again PH for peak high. And then coming out of the peak high, you can always tell, because what happens here is I mentioned this 1350 cross. So when I say 1350 cross, I mean this right here. The red and the blue EMAs cross each other to the downside. That's how I know this is a confirmed downtrend at this point. It's just giving me that extra confirmation that we're no longer in peak high. We are now in level 1, right? And why? Because the 1350 has crossed. We are now in level 1, right? So this is literally the same damn thing. The chart and my markup is the same thing. Now, the only difference is we guys got to account for sessions. He says, so H4 and H1 and 15. Yep, those are the only ones I will look at, to be honest. On a rare occasion, let me go to, I guess, another one quick just to kind of point something out. And you'll notice I mark this up all the time, but let me find one that I haven't marked up really quick.
He has it tattooed on him, Alex.
I do. It's a whole thing. Right?
He just won't tell us where it's tattooed.
Good one. Good one.
That's very good.
Right. Okay, so I see your question too, Tanaka. I just want to answer Isham's question really quick. So H4, H1 and 15 minute, yes, right? So the only time I look at the daily, to be totally honest, is if I'm taking a 4-hour trade. I typically don't look at it much, but let's say, hypothetically speaking, I'm trying to find something here. All right, this is way too sloppy, so I actually can't find an example right now. But let's say, hypothetically speaking, let's say, and again, this is not what I would do. I just want to, I wouldn't take this trade. I just kind of want to point out an example. But let's say, hypothetically speaking, we have this 5,200 cross to the upside, and I'm looking for my same pattern, right? Let's say I'm looking for some type of W going long, right? In this example, which will look, maybe something like this, right? If I'm on the 4-hour chart and I'm looking to take the trade long on the 4-hour chart, then I would look to the next time frame, because there's 4 things I'm really looking for, right? Which would be, one is, where am I in the cycle, right? Am I in peak high, peak low? Am I in level 1, level 2? That's what I mean when I say where I'm in the cycle. The next would be, I'm looking for some type of pattern off of the 50 if I'm in level 1, or the 200. Well, the 50 if I'm in level 1. In level 2, it will be something off the 200. But also it could be that level 2 trade as well. So I'm looking for some type of pattern off the 50 go to 200, basically. Right? So when I say that. But mainly, when I get to the number 3, higher time frame confirmation. Right? If I'm on a 1-hour chart, I want to see like how we are here. So that's gold. I'll come back to this in a second. If I am looking at this trade, right, and I'm trying to see if this trade makes sense on the 1-hour chart, right? Like, is this a good setup to take? Let's see. I'll be looking for price to close below the 13 EMA for confirmation on the 1-hour. But simultaneously, I also want to see price below the 13 on the 4-hour chart. So not the open candle, but the previous closed candle, which would be this one. Right? Is price below this 13? Yes, it is. So this has that 4-hour confirmation that I'm referring to. Right? Now, the only other thing that would change that is if I'm on the 4-hour chart. If I'm on a 4-hour chart, I'm going to look up at the daily for that higher time frame confirmation. If I'm on a 1-hour chart, I'm going to zoom it up to the 4-hour chart for the higher time frame confirmation. Right? So basically, yes, 4 hour, 1 hour, and 15 minute. But again, the caveat would be if I'm taking a 4 hour trade and I'm entering on the 4 hour chart, which would be for me a swing trade, then yeah, I will look at the daily. So 90% yes, H4, H1, and 15 minute. Every now and then I'll look at the daily if I'm taking a trade on the 4 hour chart. And then lastly here, I'm looking for, not pattern, some type of entry signal, right? Which would be, again, maybe it's a candlestick pattern. Maybe it's always going to be a close above or below the 13, something like that. But I mainly ask myself these 4 questions, right? Thank you. Okay, perfect. I'm glad you get that. Then we got Tanaka saying, Coach Michael, I wanted to ask if the market maker cycle are you showing is similar to the BTM strategy by Steve Morrow. Tanaka, that is exactly what I'm showing. When I showed this picture earlier today, that's my guy, Steve Morrow. That's who taught me everything I know. Let me re-show it here. Yeah, she says BTMM. Yeah, beat the market maker. That's exactly what it is. That's where I learned all of this stuff from.
Yeah, that's what I was looking up on AI. I saw that question and I was looking up Steve Morrow. I didn't realize that was the same guy.
Steve Morrow's right here on the left-hand side. Yeah, this is Steve Morrow right here with me.
Yeah, because I was looking up his site just a little bit ago while you were talking.
Mm-hmm. Yep, learned everything I know. When I mentioned earlier, I think actually I was in a session with Tony, but man, I went through a lot of mentors, a lot, right? Like a lot. It wasn't until I found this guy right here on the left-hand side who actually really gave me the real game. This guy learned from a market maker, right? And the one on the right side is his protege. So Steve Morrow's to the left. They'll say the king of kings when it comes to trading. On the right-hand side is his protege. And then you got me in the middle of their protege, basically. So yeah, to answer your question, Tanaka, yes. The market maker cycle, beat the market maker strategy by Steve Morrow. Yeah, this is him right here on the left-hand side.
So cool.
Okay, yeah.
So yeah, absolutely. Yeah, everything I'm teaching is a rendition, a variation of this, right? Like, I mean, literally, guys, I can't thank this dude enough. Like, I will still be bumping my head against my computer or the wall trying to figure out what the hell is going on. It wasn't until him that showed me, look, you need to unlearn all that stuff and learn this, right? And then obviously, there was a few people there, but I gravitated towards Carr. Right, like Carr taught a variation of Steve's method, same exact method, but some different nuances. And he's a real math guy, as am I, so I just gravitated towards his approach a little bit more. But yeah, in essence, it's the same strategy, the same cycle, same process to really going through things. Over the years, I just added my own twist to it and what I like to see and what I don't like to see and take. Right, so, but yeah. To answer your question, absolutely. These are the guys right here. My trading career,
yeah, I found him on YouTube. I have to go take a peek at some of his videos. Yeah.
He's big. This dude's huge in the space. So, yeah, absolutely.
Nice.
Absolutely.
Cool. We'll check it out.
Cool. Just kind of getting up into it. Where were we? Oh, we were on NAS 100, kind of getting into some of this stuff on a 1 hour. So yeah, just a little bit. Once again, kind of getting back into it all. Alex, this is my bread and butter. This is what I trade. When I bring up everything and I point out why I would be interested or not interested in something, it's because it's this exact reason, right? So. But yeah, I was looking at this. I was also, see, again, I just don't really like this session, really. What I would like to see. And Ishan, this is where I will drill down to the 15-minute, right? So on the 15-minute chart, what I would want to see is something similar, except I would want to see this, what I would call the ID50, right? So at this point, because I don't want to take this now, I want to see this come back up here, bounce off this 50, give me some type of structure, then I'll be interested in going short at this point, right? This market baseline will continue to go down. You'll get the RSI line and the signal line to come up, something like this. And that move will look, boom, something like this. Oh, right. So if this sets up on a 15-minute chart, I'll be all over it. I would prefer if this can set up in the New York session. We don't have any news today, no red folder news, so I'm not really worried about the news. But yeah, I want to see something like this. All right, so this is what I'll be looking for on NAS 100. Yeah, I guess I can just go through a few pairs. Let me get back to the 1 hour chart. See, I always go back to the 1 hour, like always. Because for me, I can see going up to the 4 hour, or I can see going down to the 15 minute. I can see all of that pretty clear. So why can't I move this thing? Okay, there we go. All right, cool. So yeah, you'll always see me draw this up a million times. This is what I do all the time. This is that cycle. But yeah, a lot of these are from last week, so I do need to move them all. At least majority of them. But yeah, same exact thing, guys. Okay, looks like we got a poll here. Which type of news do you trust most in FX moves? I can't lie. I don't really. I gotta go with the bottom. Market technicals, no news. I just gotta go with that one.
U.S. economic data, central bank speeches, geopolitics, global headlines, market technicals, not news. Yeah. There's a lot of gray area in that question. It really just depends on who you ask, right? You got people making a lot of money on strictly technical analysis. A lot of people making a lot of money strictly on fundamental, some on sentiment. I mean, I use the combination and lean heavily towards the fundamental and sentiment, but yeah, it's just like everything. It's just like every other question we get. There is no real solid 100% answer either way because there's so much gray area in trading. So, but yeah, I'd be interested to see what everybody else puts. What do you think, Alex?
I mean, it's hard. I think I can't remember who did it. It was either in Trading the Zone by Mark Douglas or it was in Best Loser Wins. But it's kind of what you were talking about just there. That's such a gray area because how do you want to express yourself in trading? There's a million different ways that you can do anything in here. So I could give an answer, but yeah, it's really hard. I genuinely have to sit down and think about it for a second.
Yeah.
Dude, you literally just named the exact two books that I think all traders, if they want to take this serious, should listen to.
Absolutely.
Best Loser Wins.
Yeah.
Yeah. Like I don't know if even in the video, like the Know Your Coach video, that's what I was listening to, right? Like, that's amazing. It's an amazing. I love it, but right because he was like, wait, how can I need to be a good loser to win? It sounds like an oxymoron. It's like, yeah, actually you do.
Yeah, it is so true. No, they're both great books. I think if I haven't put them in there, I'm going to put them in the resources tab. What I'll do is find a YouTube. I like to find book reviews, like book summaries, because I recommend books every week. So I'll actually probably throw those up there because I don't see them on the Discord yet. I'm going to put both of those up there later. So I definitely encourage everybody watching this. If you haven't read those books, go watch. It'll be like a quick 3 to 5 minute book summary video. So as soon as we finish our stream, that's the first thing I'm going to do. Just go watch those streams. It'll just brief you on the book just to give you an idea. And then if you think that might speak to you, by all means, get you a book, get you one, Amazon.com or or even if you go to like Audible, which is what me and Michael like to use to listen to it.
I do as well.
Yeah, it's the best, right? So I would highly, I'm sure all three of us would highly encourage you, go listen to both of those books. Absolutely. They're really good stuff.
For sure.
So, absolutely.
It really paints that understanding.
Yeah, absolutely. I think if I could single out one chapter for people to go across from like me trading and teaching other people, it's the chapter about disgust, because I think first time you hear it doesn't really make sense. But the more that you listen to it, and the books that you should go over multiple times, but in Best Loser Wins specifically, the chapter about disgust, it changed my trading. Because basically the premise is like, you can't just be motivated. Motivation is only going to get you so far. It can get you up out of bed, but motivation dies and it's replaced by discipline. But disgust trumps it. Like, if you really don't like where you are, or you don't like the house you're in or the job that you have, you will move heaven on earth to get out of that position. And if you look at the trader that you are, or the mistakes that you're making, and I know I did this for myself, when I finally got actually sick of it, and I was like, oh, you've ruined your rules for the 1,000,000th time, Alex. My trading just took off. It was a huge cornerstone. It took me about 3 or 4 times to read it to be like, oh, I get it. He's not having a go at me and saying I'm disgusting, but he's saying, have a look at where you are and don't be okay with it. Like, if you want this to be your journey and your thing and everything that trading can give you, take stock of the situation. It's okay to be like, this isn't all right. I'm not happy with this. Let's do something about it.
Yeah,
I love it.
Yeah, well, a great parallel. I mean, it's so true, and really just about any. Well, I should say a lot of industries. I mean, because I come from a background of sales, and the book that I read that helped me a lot in sales it's called Go for No. So it's very similar to Best Loser Wins, meaning you're going to get told no a lot of times when you're pitching somebody a product or a service. You're going to get about 97 no's out of 100, right? So you just got to go through the numbers. It's a numbers game is all it is. It's just the same thing in trading. You're going to make losses. That's built into the system. I'm fully aware that I'm going to lose about 60% of the time. I have roughly a 40% win rate. So I expect the losses because most of the time I will have a loss. That's just the way the numbers work out. It's just yet again one of those cliche things. Like, you just gotta go through it. I mean, it's all in how you look at it. Though I look at it as just simply the cost of doing business. Like, that's why I sound so nonchalant. Like on my silver trade, I lost Friday. That's why I was just so nonchalant about it. Why? Because I'm not wagering a lot of money on those trades. I mean, it took me 5 years, 6 years to figure out the whole risk percentage. Like it took me way too long to figure out. You dummy, you need to quit. You need to quit betting 3, 4, 5, sometimes 10% of your account, on a trade. So just get okay with losing. Just like in sales, I had to get okay with getting told no and the phone hung up on. I sweet talked him. I made quite a few sales, so I did slightly better than the average, but. But yeah, when it comes to losing, it's just a part of it. Cost of doing business. It's just a mindset. The first instinct when you lose it should not be, oh my gosh, and get that sinking feeling in your gut. I know for me personally, back in the day when I had losses, it hurt. Well, it hurt because I was wagering way too much. But now when I lose a trade, I DGAF. Because when I get that winner at 2-1, at 3-1, it's going to more than compensate. And that's another reason why I love doing the zones on top of zones. If I've got a couple zones within proximity to each other, if I lose the first one, oh well. By the time I jump into the zone that hopefully ultimately works, it's going to more than compensate for that loss. So, good stuff. Excellent stuff. Great books. I'll get those posted after the stream.
Yeah, I agree. And something on those same lines. I used to be in sales obviously before as well. And I was selling cruises at this particular point. When I first got to Fort Lauderdale, Florida, I was younger. And that was one of my first jobs. It was easy to get a sales job at the cruise place. They was paying hourly plus commission. And it was like, yeah, you're selling cruises. I'm like, selling cruises? I'm like, I've never even been on a cruise before. Like, you don't have to have been on a cruise before. Just learn the product and sell it. I'm like, well, how much is it? Well, it's free. That's what they tell you. This is them selling you, right? This is how you learn about sales. I'm like, how is it free? Like, see, they actually sold me at this point. I'm like, well, it's free, but you got to pay the taxes on it. But it was a great deal. Like, I mean, you literally, it was a cruise. You spent $118 for 2 people, 3 days, 2 nights. You got all the meals, the entertainment, everything's included for $118. I'm like, what? That sounds too good to be true. I'm here, everyone says this, right? So that was where I got my, like, first, I would say, understanding of sales. The thing was, once they bought the cruise, comes the upsell where you sold them the full package, and that's where you made the money, right?
Get your foot in the door, and then drop
exactly,
and then like they say in Wolf of Wall Street, unload the dog, you know what, onto them.
exactly. The penny stock where we make the money, 50% commissions, baby. Right? But no, it was amazing. Like, I mean, then guys, that's when I really learned. I was like, man, this is crazy. Like, but like you said, Tiger, you got a lot of no's. But it just got to the point where I just got so good at it that I literally didn't care. I'm just looking for that person in this 6-hour time frame who's going to say yes. Right? That's all I care about, is the person who say yes. This person is going to make my day to help me get my number, right? Out of 100 people that you call on the average on a daily basis, only 2 or 3 of them are going to say yeah, and that's all I need. That's all I need for them to do.
Smile and dial, go through your 120, 150 dials, and just keep a positive attitude, and they'll come.
Yeah.
I don't miss
those days. From that mindset, and that happening, getting to trading, that idea of, it's going to take you a lot, right? Like the best loser wins or whatever. Oh, it was very understandable at that point, because I've already gone through something similar, in my life with hearing no so many times. You know what I mean? So
yeah, it's definitely helped.
I don't care about trading. Yeah, it's like you just care a lot less, right? Like, and I get it, losing sucks, but it's not the loss that you think it is, basically, right? Like, it's just a step forward. You just one trade closer to that pop that you're really looking for. So once you can grab that ideology, it's a game changer, right? Like, that's what it's all about to me. But cool, I see Tanaka saying, wow, thanks, amazing coach. Thank you so much for the answer. You just boosted my confidence because I'm currently back testing. Yeah, back test the mess out of this. It works. This is the cycle. You might have even heard that this was written out. This pattern that I draw all the time was written from Steve, saying that the market maker wrote this on a napkin for him in a coffee shop one day. He was like, look, I'm going to give you the whole business right here. You want to be trading these 2 zones. That's really it. And just don't worry about up here. Don't worry about at the bottom. Just trade these 2 zones. This is where you make your money at. And this guy has been on top of the world ever since he figured that out. Right? So this works.
Yeah.
Right? So take heed to it for sure. You guys will always, always, always see me follow this exact model. Right? And again, this is just one way of skinning the cat. Making money out of this market. There's a million ways. This is just my approach, my method, what works for me. And, I can pour into whoever wants to learn this stuff on this particular cycle and how I'm looking at it. Because, this pattern has changed my entire life. I went from living in Fort Lauderdale in a 2-1 apartment, trying to figure this stuff out, to living a beautiful life in Mexico.
It's kind of, Michael, it's ironic because when I was in sales, my second year, I had the highest sales percentage over the first year in the whole company. And so I ended up winning a trip to Cancun. I don't know if I ever told you that, but I was able to go I was allowed to go with the President's Club. And but anyway, I went to get my passport renewed and had some issues, so I couldn't get it renewed in time. So I couldn't even go to the trip.
Right.
Like,
right.
Damn it. But they ended up giving me a bunch of perks on the side.
Right.
Speaking of
where
you live.
When I mentioned that cruise place, literally, guys, I promise you, my very first week there, I outsold majority of the people. Like my very first week there. And it was like, I told myself, I was like, I think I might be good at this. Might be good at this was an understatement. They used to have this thing, it was called the Tens Club. If you was in a Tens Club, you got to get there when you wanted to. Your commission was bumped up. Your alley was bumped up. And you sat in a little special corner. You got all inbound calls, right? No outbound calls. You're just getting inbounds all day.
So that's too easy.
Dude, I was smashing it. I was in a Tens Club for like 3 months straight. It was easy.
Yeah, that's awesome.
Right. And they used to ask me all the time, and it was like, literally, it was the craziest thing. And I don't think I even really noticed it until it got asked to me from like someone new. Because, you know, in sales and something like that, they'll get you to be what they call a TO, a takeover. Right. So you might have someone on the phone who's kind of interested, but they can't quite close the deal. And they want to hear that second voice. So I'll jump on the phone. Hey, yeah, I got my rep here, you know, Tiger. He said he was interested, just probably had a few questions. Like, what's going on? How can we help you out? And I just came on with this second voice, you know, different type of energy. But when I would always close them, you know, for the most part. And they're like, how are you doing this? Or like, you know, what is it? I'm like, we got to meet them where they are. You know what I mean? Like, there is don't focus on trying to sell this. You know what I mean? You should just create this air of, this is an irresistible offer, right? We all know about that from funnels. You kind of can't say no to this. I'm giving you a round trip ticket, flights included. We're upgrading your cabin. We're giving you all these bonuses. We're giving you bonus vacations. You kind of can't say no at this point if you do have the money to do it, right?
Right.
Every excuse they had, there was a rebuttal. Well, I can't go this year. We'll give you, instead of 18 months, we'll give you 2 years to use it. I don't know if I can use it. Do you think you can use this in 3 years? Yeah, I'm sure I can use it in 3 years. Cool, we'll give you 4 years. All right. Like, you create this era of, you can't say no to this. Yeah, this is
here and here.
Of a lifetime here. So, yeah, just amazing. But yeah, it was unbelievable. But yeah, coming back to it, this cycle has changed everything for me, right? Like, I went from being lost and confused to, man, I got this and I can teach this to other people. So love it. Have all the confidence in the world you need, Tanaka, to really get this. So cool. I'm rambling. Let me get on to the next one.
Good stuff. Good lessons in this.
Right. S&P. So I once again got the same stuff. Right. I'm just really trading these exact areas. Once again, staying away from the peak low. Only want to be in a peak high. I don't want to trade in these zones at all, guys, because what happens a lot of the times is, and I'll just draw it kind of like this. The reason I wait until it breaks below and retests that zone is because we all know about this. They got this thing called chop.
Chop.
This could do this
you
all
know a thing or two about
until
chop?
it breaks below. Yeah. And does that, right? This is where I'm interested in it. Right here. This thing could stay in this area for a long time. So when we talk about
sorry to interrupt you guys, but I've got a trade. If you want to check it out, I've got a trade right now.
Yeah.
Yes.
Jump on it, man.
Yeah. Want to share that? I'm sorry to interrupt you.
No, definitely. We do it all the time.
That's
priority.
Okay.
Right.
Easy. All right. So this is what it's going to look like. We're going to be jumping in just a tiny bit later, but this is what it's going to look like. Now I've got this indicator here that tells me how much risk I should be using, which is pretty handy. So I've got my lot size over here at 0.29 for USO USD. Again, you might find it as WTI. It's the exact same thing. It's the exact same charts. We can go for it. So, and it's already shooting up. Oh, wow. That's actually crazy. So and this is what it is. This is what it is with scalping. It's absolutely going for it. So we've got our take profit here. This is actually a 1-to-1. So it's actually a bit bigger than I usually go for. So usually it's 0.8, 0.7, maybe even 0.9. But this is what we have here. So this is what we're talking about. So we've got the VWAP for the London session, and both of them are pushing up, and you can even see that over here on the 5-minute charts as well, which I liked in comparison to the other one, where they're both moving. Maybe it's slowing down a little bit, but they are both still moving to the top side, which I like a whole lot more. And now we're just absolutely sailing through it. So from here, what we had on both of them, which is fantastic, and this is what I talked about previously, we've come down, we've basically jumped and hit this VWAP here, and you can see we've got these impulsive engulfing candlesticks. And it's just a beautiful story on here on the 5 minutes as well. Peeking your head out of this area, we waited in it till it came down, and the engulfing candlestick impulsive move not only breaks out of the range, but it breaks the top of our Bollinger Bands as well. This, for me, is an A++ setup. Now, hopefully the market doesn't go, hey, 20% you lose. We're going to come in now. Yeah. But we'll see. Should it get to this 0.50 zone, which is literally right here, we will be moving our stop losses to break even anyway, just because the markets can move very, very quickly. We haven't quite hit it here, and you can see hasn't done it. But if it does decide to come up and hit here, we will move our stops there. Otherwise, as we can see through here, we are going to be going for this 1-to-1. This is exactly where we're hitting it, which is just beneath our last, I guess, major high in this area. So we just have to wait and see what happens. But yeah, we're in the trade now, and it's going to play out. Hopefully we get something good from it.
Heck yeah.
Nice.
And that was, you said your trigger candle. Your trigger candle was the one that went on the opposite side of the Bollinger Band. Is that right?
Yes, exactly right. As soon as it broke up above here, again, it's telling me like I want to come up. Not only have I broken out of this range, I've retested the VWAP. Maybe whilst it's around the range or in between these two areas, it can kind of just stagnate. Maybe we're going to do what we did basically over here and hit it and use it as resistance. But if I'm breaking out 8 times out of 10, we are going to come up. Maybe we'll form some sort of lower high. Maybe we'll use this old line here and we'll hit it and then continue to surge upwards. But yes, long story short, this is the trigger candle that we have right here. Once it breaks out, it's the exact same as this one here. So essentially, you can look at it either way.
Yeah, once you got out of your 30-minute opening range.
Yes, exactly. Yeah, we don't want to touch that. Don't want to be in it. Don't want to be doing anything with it. So yeah, just needs to get out of that range. Stay out of here. No. As soon as we're out of this and then out of here, we're ready to go again. So yeah, perfect.
Heck yeah.
And I'll just
question: Do you take partials or anything, or you just move your stop loss to break even?
I'll move my stop loss to break even, and that's usually it. I mean, the markets move so quickly. especially when you're scalping, it's very hard to say for me, like, move my stop loss up, or maybe I'll take out some sort of partial profits. But again, it might dip down and then shoot back up within the space of a minute. And then you're kind of sitting there going, oh, well, I wish I didn't do that. So the back testing is, or has been, over the thousands or tens of thousands of examples, does it hit here, yes or no? And that's where we hop out.
Gotcha. Okay.
Nice.
Gotcha.
Oh, good stuff.
Now we just have to wait
play
and
the
see,
waiting
and
game.
hopefully the market is really cool. But no, all good.
Oh, okay. No worries.
Yeah, I mean, this is either going to be a test like you were talking about, Tiger, where it's the best loser wins. You take a loss, but you wait for the next one. If it's the only trade that I take today, and it does happen to be an unfortunate loser, then you've got to just be like, as you said, this is built into the strategy. 20% losses, that's going to happen. You have to take it, and you have to be okay with it. Otherwise, it's kind of like, as my mum used to say, it's like getting annoyed that the sun comes up. Like, what's the point in doing it? It's going to happen.
Yeah.
So why are you getting annoyed? You know, just like, why would you do that? So, yeah, that's what it is through here. But I would just sit back. Usually, for if people are asking about trade management, I don't like to look at the trades because, especially when I started off, I would literally just do this, add alert, and then I've got everything already in here. So my take profits up here, my stop losses down there. It's set. I'm going to walk away. Because if it goes down, I don't want to be watching it. And as soon as it hits here, all I need to do is just put it there, and then I just walk away. Otherwise, as I said, my little ADHD brain, it's going to be wanting to tap away. So I just eliminate the need to watch it. Not going to do it.
Yeah, I mean, you touched on an important point. I mean, when we're sitting, and this is for everybody in the chat, and we've all done it. When we're sitting watching a trade we're in, our brains start playing mind games. We start seeing, oh, wait a minute, there's a little bit of a break of a structure there. Wait a minute, there's a little bit of a change of a character. Maybe I should move my stop loss. Maybe I should move my take profit. And the reality is, we tend to be our own worst enemies. We're choking out the trade, right? You got to give it that leeway, that wiggle room. So I know I'm bad about it, even still to this day. I'll still be sitting and watching a trade and see things like that. So, there just comes a point in a time where you got to trust that your system is going to work for you, right? It's going to work for you the bulk of the time or whatever. But when we start choking out our trades, it's just obviously setting you back. So leave it with the wiggle room. And again, I'm one of the worst about this. So I'm essentially saying this to myself more so than everybody else. It's just a good reminder to just step away, go take a walk, go whatever, go eat your lunch or whatever the case is, and get the hell away from the trade. Sit on your hands. Maybe it doesn't always work, right? You can always hop up. So just get the heck out of away from the computer. Let your system play itself out.
You have to.
Exactly.
Especially in the beginning.
If it's going poorly.
Especially in the beginning.
That's not going.
Yeah. No, it's just one of those things. That's the worst thing to do, because for some strange reason, what happens, as soon as you close the trade or whatever, what happens after that? It rips in your favor, and you're like, ugh, I can't believe I did that. And then how many moments do you need for that to happen before you stop doing it? 100, 1,000, 10,000? I don't know. It's all relative.
Mm-hmm.
Like you said, Ty, you just got to trust the process, right? We know that phrase, trust the process. Have you done your homework? Yeah. Have you marked up the charts? Have you seen this set up countless times? That's why you entered the trade.
Have you back tested it?
Just let it go. Yeah.
And
as long as you don't have on too much risk, you should be totally fine. Right? Like, you should only be worried about that if you got too much risk on.
Yeah, that's it.
Mm-hmm.
I wish I would have gotten that gold trade earlier. It already moved 3-1 on me. Oh well.
What?
Yeah. And then you miss trades when you flap your lips, like I do a lot. But it's okay. It's not about me. It's about helping out, teaching and trading. So
Right.
Exactly.
Good stuff.
No, for sure.
Cool.
I actually like this setup here because for me, it kind of looks like, again, crude oil. This thing seems to never like play out the way I want it to. But market structure wise, this looks great. Tiger, you would
That's your
catch it.
double.
This is like, for me, it would be half a bat long. The left leg is
that's
low.
it.
The right leg is higher. It closed above that structure. That's it. That's it.
That's it.
That's
Yeah,
a nice half a bat.
That's a beautiful trade. Win or lose, that's a beautiful trade because that's the perfect W as well.
Yeah. Yeah. Well, we'll see. It's deciding to barrel its way down right now, but
This is where you just switch off to something different, right?
Yeah.
So it's funny, right? Like I used to do this game, and I still do it to this day sometimes. And I have this weird trader infatuation with Bobby Axelrod from Billions, right? Like I always mention all the time. And it's one of those things where I'm like, I feel like Axe does exercise where he'll just take random trades and just see it go against him, and just sit there and just take it, build his, build his whatever you want to call it. Infinity for being able to endure. You know what I mean? So sometimes I will sit there and watch it, right? Not tick for tick, but I will sit there and watch it and just see it. But just to build that muscle, like that skill or that desire to want to close, it was like no matter what you're doing, sit on your hands and watch this. Just sit on your hands literally and watch the trade. You know? Yeah, I'm trading when I'm charting, so I can't sit there for hours. But the point is, when I'm seeing it go against me, I want to just make sure I'm watching it just to see, like, okay, it's okay. It's not the end of the world. If it goes against you, you're fine. Just to tone down that emotion, because what happens is every time you do it, it just gets smaller and smaller. You can't notice it, but it's getting smaller and smaller. That little desire to want to close the trade or, I'm gonna just take the money and run. Next thing you know, it's so thin, and it's like, it doesn't really matter. Do I want it to win? Yes, but if it doesn't win, did I follow my process? Yeah, then you're good. That's all that matters. You followed your process. You can't do anything about this part. You did your job. Right. That's what matters most. Right?
Yeah. I agree so much. Like if you back tested it, which you were talking about before, it's like, I always say to people that I used to teach in the past, like if you've gone and you've back tested it and you know what the data is, then you should always go back to it and just say like, hey, you're going to be okay. Because the data over this period of time is going to say this, and it has for the last 8 months, 2 years, 4 years, whatever it is. And as long as you can have that in the back of your head where you go, okay, yeah, maybe this sucks right now, but I know that if I play this out like long term, even if you do something crazy, like it's what you can flip a coin 100 times, it doesn't come out at a 50-50. You might still roll heads like 7, 8, 9 times in a row, which is crazy. And you can do that with an 80% win rate. And then all of a sudden, over the next 2, 3, 4 months or whatever it is, then the win rate comes back. I think it's a massive, I don't know, misnomer is the word. That if you got an 80% win rate, it's like win, loss, win, loss. It's not. I can get a string of losses. It's going to come out in the most random, strange ways. But as long as you back tested it and you're like, this happened 6 months ago during this month, you're going to be okay because you've got a reference point, which helps me out so much.
And now, right, we're getting into the topic of, once again, hate to sound so cliche once again, but now we're getting back into Mark Douglas trading the zone, right? Because at the end of the day, you don't know when this is going to happen. You just don't. There's no way to know that. You just have to play the odds. A good example would be, right, when people go to the casino and they want to play roulette. and like, oh, it hit. There's no way they can hit red or black 4 or 5 times in a row.
There's people that try to do it.
This is when the bookies say, "Hold my beer. We got a sucker right here. Let's get him." All right. I'm gonna show you 31 blacks in a row. How much you bet on that? Right. Let me show you.
There's always
definitely
that one person.
Yeah. That's like saying the market's already high. It can't go any higher. You've never seen this thing in action before. Right?
Yeah.
Right. You haven't seen this thing in action before. It's like, oh, they get on the court. Michael Jordan and Kobe Bryant's having a bad night. It's like, oh, this is the great Kobe that y'all talking about? This is Michael Jordan y'all talking about? He ain't all of that. Oh, you bet not say that out loud. I'm sure y'all heard the stories.
Yep. Oh, yeah.
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 Like,
if anybody.
Chilling. Now I gotta cook you. Just to show you.
If anybody has not watched that, you got to go watch The Last Dance. It's like, what, 10, 11 episodes?
Michael Jordan.
Yeah, Michael?
Yeah.
Yeah, The Last Dance. Showing his journey. And you hear nonstop stories, exactly what Michael just said. Like, somebody would put something in the press or a story, or he would overhear them in a huddle, opposite team huddle, say this or that, or he ain't all this, he ain't all that. But, yeah, he catches wind of that. He always looked for a reason to get pissed off at the other team. Even if there wasn't necessarily a reason. He'd just come up with the reason. Well, this dude said this. That owner said that. And then just use it for fuel and just wipe them clean. So, no, good stuff. Everybody's got to go watch it. It's about 10 episodes, but it's well worth the time just to understand them. And it comes back to trading too, because it's to understand the mindset. That's the whole purpose of that. That's what I took out of it the most, was just learning his mindset. I mean, I always knew Michael Jordan was the GOAT. I mean, of course, now people these days are trying to debate Michael, Kobe, LeBron. But anyway, I'm in my 40s, so it's definitely MJ for me. but just to understand the mindset.
I used to live in this point in time when he was the man. We lived in Chicago, right? My name is Michael from Michael Jordan. Seriously, my mom named me Michael from Michael Jordan.
That's amazing.
That's awesome.
It was Michael in our era. It was Michael Jordan and it was Michael Jackson. I don't know if you guys know this, but I was actually born in Gary, Indiana, and our biggest claim to fame of Gary, Indiana, is the fact that the Jacksons were born. Michael Jackson was born in Gary, Indiana, right? So you had Michael Jordan, you had Michael Jackson. My mom, I'm naming my son Michael. That's it. They was the best ever at that point.
There were a lot of Michaels born at that time too. Yeah, that was one of the most popular. That's probably the most popular name. The most popular, but
I bet.
But no, the mindset though. Just finishing off on that, that's the best part about that series, and it's helped me in trading. Just watching that, just understanding the grit and the grind that you got to go through. I mean, nothing beats it.
And
it's all about cows.
Yeah, like even when we talk about Kobe, I'll be honest. Michael Jordan, Kobe Bryant, this close, right? Like this close. I love Kobe. I've always loved Kobe Bryant.
Yeah.
But even some of the clips from him, right? It's kind of like the mindset that he had, Mamba mentality. I don't know if you guys listen to the book on Audible. It's on there too. But yeah, just the smallest little thing is like, what? Like you can't believe that someone would not just do that, but not thought that, but you actually did that. Is like, yeah, this guy is top notch. And they have a million stories about Kobe, just how they have about Jordan. Like, it's just insane, right?
No, I agree. Though
I forget which player it was, but it was like, it's like I'm having a great. It was Shumpert. I want to say his last name was. It was Shumpert or something.
Iman Shumpert.
He's like, he was doing it. Yep. He's like, he was having a good game. He's like, man, I'm killing him. Like, I'm getting Kobe, whatever. I'm not even saying that. I'm just noticing I'm on fire. He's like, I can't wait to get home and tell my cousins I stopped Kobe Bryant. You know what I'm saying? He was just like, he's like, I was happy about it. He said, this dude ain't said nothing the whole game. And then he hit me and he says, he's like, yo, you had a good game. He said, he messed my head up because I'm thinking, good game? This the third quarter. What you mean good game? He said, man, he went off on me after that. He said, this dude ended up with 40 points. And I'm like, and they won the game. He's like, I was sad. I'm like, he's like, what is this dude on right now? You know, like countless stories about Kobe and Michael Jordan. I love hearing how their mindset was. And even we get to Phil Jackson, to hear Phil Jackson talk about how Kobe and Jordan thought is priceless. It's a crash course on mindset to hear him talk about them too. And you can bring that to trading.
With the kid and play haircut and hairdo at the time.
Yep, that's it.
The old flat top.
You know what we got to get going? What I'm thinking of, Tiger, we got to get going somehow, like to be able to just play these little clips, right? Like, just start giving them and just play a clip really quick and just because we can tell the story, but it's nothing like seeing it. You know what I mean?
Yeah,
so,
exactly.
Maybe get something like that going for sure.
Yep. We'll have to talk about that further. I'll be right back, gentlemen.
Yeah.
I'll be right back. 2 minutes.
Gotcha. Okay. Yeah, take your time. But yeah, we definitely gotta. It's all about that mindset, right? That mindset is just wrapping your mind around it all, and just really understanding that this is a process. They don't say trust the process for no reason. Like you gotta be able to trust the process. When you take this trade, winner or loser, the only question you should ask is, did you follow your process? Yeah, then great job. It doesn't matter if you lose or win. Did you follow your process?
Yeah.
No. Well, if you lose this trade, that's on you. Do better next time, right? And I don't mean do better next time in a sense of take a better trade. No, follow your process better next time around. Did you miss something? Did you get emotional when you just jumped in early? Did you put your stop in the wrong place because you got greedy? Like be real with yourself. Like what happened? What did you do? If it's a natural loss, that's totally fine. But anything outside of that, this is on you, buddy.
Absolutely. I think for everyone listening, and this always is something that blows my mind. Like this is the first time I've ever spoken to Michael or Tiger, and vice versa. Yet you come in here, and I'm from a completely different part of the world, different age, different upbringing, all these things, and we have this Forex thing, or we have trading to unite us together, among other things as well. But when it comes to some key core principles, doesn't matter if it's us or you go over to and listen to Michael's mentor, because I'm sure he's the same, or you find mine, his name's Rock, he's from Estonia, or you find Tiger's. They're all saying the same things. There's not really that many successful traders. And I just mean successful in terms of just long term, you're profitable. That's successful when you get it long term. That's for me anyway. When it comes through this stuff and you go, oh, actually, all these people that are from, again, completely different parts of the world, different ages, all these things are completely different. Yet their mindsets are just linked. Everyone is on the same page. We might have 100 different ways to make money in the market. We might think differently about risk management. We might think differently about Bollinger Bands and how to use them. But when it comes to the mindset, everyone is just like, yeah, I've got you. I completely agree. You know what I mean?
Yeah. Lock, step, and key is what they say. Like, absolutely. Like, I don't really care about that part, right? It's like, oh, you're looking at this wrong if you think that. You know what I mean? And again, how you just mentioned, the mindset is key, right? And if you've seen Tiger's Know Your Coach series or the video, he has the book, The Magic of Thinking Big by David J. Schwartz. That was the first book that I got introduced to when it comes to personal development. And that's when you realize,
me too,
man, it's great. It's crazy how ... And when personal development is his own journey in life, right? And I say this to everybody, like, you don't really get to know who you are or who you want to be because you don't have enough information yet until you know yourself, right? That's why it's called personal development, right? When you develop who you are as a person by yourself, then you can figure out who you are, what you want, where you want to go, and you can sculpt yourself in that aspect. But it's just that journey, right? Whether it's Napoleon Hill, David J. Schwartz, whoever it is, right? Earl Nightingale, Jim Rohn, Les Brown. It doesn't even really matter who it is. Like in some way, shape, form, or fashion, it's all about developing your mindset, right? That thing between your ears is the most important thing that you can do in your entire lifetime. It molds you for forever, right? Like I get questioned on certain things, and even my girl, like we just like the character traits that I instill in our daughter. Like, no, she shouldn't think like this, or she should think this, or like this is what makes someone successful long term, right? Like that doesn't even really matter. It's small in the grand scheme of things, but what you learn from the lesson is most important, right? It's kind of like if you take a loss on a trade and you don't know why you lost. That's not good. I mean, you'll be here for forever, right? You need to learn why you lost the trade, right? Did you mess up, or was that something you knew already and you should have not done it because you got impulsive, or is this a new filter you need to add to your process, right? Or again, is this a natural loss? You need to be able to distinguish those, and what's most important is you can't lie to your damn self. Right? You got to be honest with yourself. That's huge, right? Absolutely huge. So yeah, just coming on, wrapping the balance to it, right? That mindset.
Yeah, I'll tell you real quick. The biggest thing I got out of that book was chapter 2, talking about excusitis, the failure disease.
Excusitis, yeah.
I'm too old. I'm too young. Yeah, yep. I don't have any college knowledge. I'm too thin. I'm too fat. Like we tell ourselves all these things, but there's always something that can be done about it. I mean, it really is as simple as that. I mean, there is no such thing. There's barriers for a reason. It tests us all. Yep. We just have to figure out a way to break through them. But then also but then also the other one on that is the thing I got out of that was like, we live in a modern era, so the brain shouldn't be used for storing facts. The only people that benefits are those that are on Jeopardy.
You're right.
The brain should be used for thinking. I mean, that's the beautiful thing with trading. We have all these websites now, endless resources to just go and glimpse at it. You don't have to necessarily memorize. That's why I said the other day, my goal, as much as I love fundamental analysis, my goal is not to be an economist. It's just to get the basic understanding of what they're looking at and then just try to put those variables in my favor. So that was 2 big things I got out of that, was ridding yourself of excusitis and not using your brain to store facts. Use it for thinking through solutions and finding, solutions to problems. So really good stuff. Highly recommend that book to everybody.
They so on that same topic, right? Henry Ford, right? We all know Henry Ford. Like they said that he actually wasn't bright at all. Like that he had like a 6th grade education. He wasn't bright. And everyone thought that he shouldn't be running the company. And they tested him, I guess, at like a meeting and everything. It was like, let's ask him questions and see if he knows this. And they asked him basic stuff that you should know, I guess. Who's the 31st president? What's the 13th element on the whatever chart? And it's like, he was getting a lot of them wrong. And then at one point he got upset. He's like, look, I don't know any of these things, and none of these things matter. But if you give me X amount of time, I can figure out the answer. See, that right there is what made him a genius, right? I don't need to know the answer. Yeah. You know what I can do? I can look it up and give you the answer right now. You can ask me any question on freaking Earth right now. With Chat GPT, in Google, if you give me 1 minute, I can give you an answer. I don't need to have it stored in my brain. That's useless, right? I feel like maybe lyrics to songs and stuff is something that maybe has
that's a given. We have to memorize that.
Yeah. Outside of that, you know what I mean? Like everything.
But that's
else
after we've listened to it 100 times. So it's not like it sticks on the first or second time. It takes a few times.
Yep. So yeah, 100% agree. 100% agree. You should, this day and age, right? You should just be able to look things up. In essence, you don't need to store it. And I always say the same thing, Tiger. Unless you're on Jeopardy or Wheel of Fortune or something, none of that stuff matters.
No.
None of that stuff matters, right? Just like when they taught us in school, some of those things is like, wait, I actually had to take this in school? Yeah. I would never, ever in my life do this again. That was a big waste of my freaking time.
Yeah.
Seriously.
Yeah, and it was probably different. It was probably a lot different 100 years ago because obviously they didn't have the internet. Books were scarce. I mean, it made more sense to have a lot of that stuff memorized, but these days we don't have to do that. We can use our brain to think and find solutions to problems and look up the answer to anything. Yeah, like you said, in a good book or a chat GPT or something like that. So
yeah,
good stuff.
Give me 1 minute. That's all you need nowadays. Sweet. But I see Webb saying progress is progress no matter what. Absolutely. Even on the front of process, right? Like just refining that process is everything. Like I swear I give all props to that part right there. It's like you mentioned also, Alex, is getting that data, right? That's the only way you can actually get that data is to continue going through that same process, right? You get to one point when it's kind of like getting in a car going to a new destination. If you've never been there before, that first time you're looking around, you kind of make sure you're in the right spot, all of this stuff, you're questioning if you're in the right spot, right? But you go to it enough times, slowly but surely, you can be on your phone, which you shouldn't be doing, texting, right? Eating a sandwich, driving at the same time, listening to music all at once. You can just naturally get there. That's what it will do eventually. You can just continue to go down that same road, literally. You'll get there.
Yeah. Right. So there is actually another trade here, which is unfortunate because I was locked into the conversation. It was so good. I mean, it moved so quickly anyway. It moved so fast, which is unfortunate. You literally look away for a minute and it's gone. However, we do have our TP here, but where's our 50%? Our 50% is sitting literally here. So if it did come back to break even, you'd be out, and this would be our TP. Which again, this is actually very unusual to have this sort of risk reward. I'm supposed to be doing like 0.8, 0.9. And I know we just lost on this one, but it's like we're talking about before. Sometimes I'll lose 2 or 3, and yes, it's ranging, and that's what's happening. And probably after here, I wouldn't take it because of how this is starting to peter out. But on the 5-minute, it still is going up. It still is bullish. So I am going to take it. And you can see again that it's presenting the exact same sort of pattern. That failed here, but as long as you follow the process, you should be okay. It's here, shoots off. Maybe for whatever reason at this point, it just didn't want to do it. We needed one more shot. We're hit here and we're going to go for it. Unfortunately, it did happen so quickly, and I was very engrossed in that conversation. It was fantastic, but technically you would have just entered here. I would have shot off, but now if it comes back down, we'd be okay. It is what it is, and you'd be out at break even. Of course, if you are going to be doing this long term, you don't technically want to hop out at break even. Do put it just slightly above, only because
+1,
you want to
+2,
cover your
+3, the spread. Yeah,
yeah,
I say that all the time. Put that +2, +3, cover the spread. If it comes
Yeah,
back
Alex,
that close, you might as well get out of it anyway. Don't take the small loss on that. That's not smart.
I call it the cup of coffee trade, Alex. Just put it just enough into profit to cover your spread, cover your cup of coffee, and then just move on to the next one, right?
Yeah, that's exactly right. Otherwise, it's gonna hurt you long term. It's gonna hurt you long term. You gotta be able to go for it. So we'll wait. We'll see. We'll see what happens through here, and might even have a euro trade on later. But I'll let this one go, and hopefully the 80% win rate decides to not have that roulette reel hitting black a couple of times. But we'll see. I've seen 000 being hit 3 times in a row, and statistically, you're more likely to win the lottery than see that sort of stuff. So it can happen.
Oh.
Who knows?
Well, better buy a lottery ticket. Yeah. On your on your Bollinger Bands, does it looks like it reset at the 2100 mark there at the top. How does that just
so
every so often?
does it? So I use this one over here, which is opening range with breakouts and targets. So it's their version of a Bollinger Band, but it's essentially the same thing, and it will just go. If we shoot up and we form this new high, it just basically jumps onto that next one rather than run through here, which is what it would usually do, right? It's just going up. So I want the breakouts when they do happen to be quite drastic. Now, if it just came through here again, you have the potential of hopping into smaller moves, which is not something that I want to do. With them jumping up, it doesn't really allow me to have multiple entries that come into these areas. Your VWAPs need to move up. Everything needs to move up in order for me to break through that again. So it's just giving me that little bit of extra confidence when I am going into the trade.
Yeah, I noticed the developer there, Lux Algo. That's the same developer that I use for the master pattern indicator, actually. So yeah,
there you go.
They do some good stuff.
Lux Algo.
Mm-hmm. Yeah. He or she or they, whoever they are, they do some pretty good stuff. Pretty good developing.
They do some
pretty good Pine scripts.
Yeah, exactly right.
So.
Yeah, I've never been into the developing side of it. I thought I'd give a foray into it and see if I can have my hand. And oh man, I'm not built for that. The numbers and the code and true and false. I'm sitting there going, what? What is it? Why is this thing true? I don't understand what that means.
No, me too.
Yeah,
we're in the same class.
Yeah,
me too.
I mean, I will say though. I will say though, you can actually use DeepSeek or ChatGPT to give some basic rules for whatever, and it'll actually design a Pine script code for you, and you can just copy and paste it. I've played around with that a little bit, just a little bit, but it's quite interesting. It's quite crazy how it can just do that. Like I just toyed around with it. Hey, write me a Pine script for the best, whatever I put, trading indicator or whatever. And it wrote it up, and I went and copied and pasted it and just did a little back testing. And yeah, there's a couple. I had one of them on specific time frames that was pretty profitable. But yeah, that's the extent I know. I don't know anything about any of the coding, but just maybe a little bit on the Pine script, which as far as I'm concerned is the only coding I would ever care for anyway. When it comes to the indicators.
No, for sure.
But yeah, all the, I don't know. That's all above all of our heads, it sounds like. We're more visual. Sounds like all three of us are the same. More visual. Oh, I see a pattern. Okay. Oh, I see NFP missed its target by X amount. Okay, it's going down. You're just like, that's all you really got to have. We don't need no PhD degrees in this or economics degrees or finance degrees. Just a little bit of chart time and come up with a few rules and just go at it. So, But yeah.
No, I say all the time, you want to see my brain go berserk? That is when it will go berserk. We talk about coding and that algorithm thing. Like, whoa. Like, that is way too far for me. My brain doesn't work well with stuff like that. I don't know what it is. It just doesn't.
Yeah.
That's my weak suit, so to speak.
Yeah. Did you go over all yours? Because I still do have a few alerts I could go over if you guys wanted to take a look at some of my alerts I got. Or unless you had another trade you wanted to jump into. Okay.
Nah, I'm all good.
All right. Right on. Yeah, as always, just interrupt if anything jumps on there. Sure. Yeah, back in. Go ahead and pop on over to my chart, and I'll just kind of go through some of these alerts that I'm keeping an eye on. Most of these are on my bullish and bearish bias setups. As far as my top setups, I do have a few of them that are and Michael will chuckle at this, I actually have one alert that's kind of going against the fundamental bias. So, but it has to do with the New Zealand dollar and the interest rate decision that they've got coming out on Tuesday. So, yeah, back in, if you get a chance, just pop on over to my screen. I'll kind of go through a few of these. There we go. Yeah, so I'll wait for the New Zealand one until he gets back. But yeah, just kind of reviewing some of my alerts. This is the Dow. So I'm just kind of keeping an eye on this one right now. I do have a little bit of a 1 hour demand I'm keeping an eye on. Now, this is just a strictly technical trade because as far as the fundamentals go, yeah, all the indices have definitely made it to the neutral. So this is giving me a +2. So about as neutral as it gets. I mean, all the recent PMI data, the retail sales, the inflation data, all of that went against, obviously, all the indices. So it's really not painting a great picture from a fundamental perspective. However, one thing that is helping is the fact that it has clearly been technically up. It's been a technical uptrend for quite a while. The seasonality is actually beneficial. The Dow does go up pretty well this time of year. And then the retail positioning, so just going back to contrarian signals, when you look at the put to call ratio in the options market, you got everybody net short. So for those reasons alone, I might look to take some small stabs on some smaller time frames. Definitely wouldn't be taking a stab at this thing on like a 4 hour demand zone or a supply zone, but just kind of doing a little bit of scalping, a little bit of short-term intraday type trading. Yeah, I'd be interested. So just looking at that, I do have that demand right there that I'm keeping an eye on. I did want to actually go to my gold chart real quick because so here's gold. I wanted to point this out. So this is the put to call ratio. And I've got an ability to track quite a few. So the indices, the metals, and then of course things like Bitcoin and others. But this is gold. So look at this. So you've got everybody buying puts, right? Which is bearish bets. Yeah. So this is yet another contrarian signal. I like to look at the retail sentiment itself, but I also like to look at the put to call ratios in the options market because, yeah, that's real money. So this is what the banks are using as liquidity to potential liquidity to fuel their plays. So, but anyway, gold is just way up there. Obviously, neutral would be right in this area, meaning there's no real bias either way. But this thing can swing pretty crazy at times, and really within a short amount of time, because you go back 2 weeks and it was a high call demand. So you had a lot of people buying, but it's just very interesting when you line up a price chart to this graph. It's just interesting how it's not always, but a lot of times quite inverse relationship. So yeah, that's gold, and then the same thing is true for silver. So here's silver, same thing. You got everybody and their dog short gold and short silver. Well, what are the big banks doing? Well, the big banks increased gold and silver, so they're doing the opposite.
Yeah,
and it's just not really a coincidence when you see it on a chart. Makes it visual, and that's one of the reasons I love it. But so yeah, that's definitely factoring into my bias. I mean, obviously, silver and gold, even with all the economic data, is still bullish. Then you throw the put to call ratio in. Then you throw the fact that the retail traders are net short. And then not to mention the big banks did increase. Yeah, those I mean, that's just a very strong case for silver and gold. So, but yeah, as far as my immediate alerts, I haven't really gotten anything yet. Nothing's really changed. Gold's been kind of going sideways during the European session. So, and really towards the end of the Asian session as well. So I have I use the sessions indicator. So anytime you see red, that's the Asian session. And then you got the start of the European session, which is this orange color. And then you got the Europe and New York overlap. So that'll be the yellow. And then the end of the yellow is the closing, obviously, of the European session. And then green by itself is New York by itself. So I love personally to do that. I mean, there's a few different sessions indicators that you can find, but for me, I just like that. Just makes it a nice color coding without really circling the boxes, because I use the master pattern indicator, which again is the same developer that you said, that does that indicator you was showing earlier. I use that. It creates boxes of itself showing where price bases and goes sideways, pretty much meaning fair value. So like, just for example here, you got a contraction box. You got a lot of them in a row. So basically you go up higher time frame and it just means it's all going sideways. So that's fair value. That's where buyers and sellers are agreeing on price. And then obviously when you get the moves away, that's where the liquidity hunts start messing around, the market manipulation. So, but anyway, I was going to say, Michael, yeah, so I was just going through some of my alerts. So I wanted to show you, Michael, on the New Zealand dollar. I think we went over this last night, did we not? New Zealand dollar.
We did. And yeah.
So this is the one alert I have on here that is going against my fundamental scores. So yeah, it is possible. It is possible for me to overlook even the algorithm. But we had this discussion because it's saying, if anything, I should be buying this, because New Zealand dollar, US dollar on my top setups has given me a score of a 4, which is still neutral, but one more positive event for the New Zealand dollar, one more negative event for the US dollar, and then obviously it make it a 5 or higher. So even though it's saying, if anything, I need to be buying this, I'm actually going to potentially sell this. What's that?
What about UJ? I think, I could be wrong, but isn't UJ and NU on the chart?
UJ is the strongest bearish, so it's minus 11.
Oh, okay, I got you. That makes sense.
Yeah. But yeah, just going through my mindset with this New Zealand dollar trade or potential trade, obviously it's mostly bullish, so I should be buying. But we have the rate decision coming up on Tuesday, right? Yeah, Tuesday, late our time. It'd be early Alex's time, but it's 10 p.m. New York City time, where they are projected to drop rates. And we had this discussion last night.
Yeah, NU is short. It's single. NU is short to me. I'm looking at it on my
Yeah, exactly. Yeah. Yeah, and I think we agreed on the same price point, kind of the 50% of this swing high, this swing low. But I really like it because, typically on a lot of these reports, what do banks like to do? They kind of like to price things in. So then people will see a report comes in, oh, this is soft, oh, this is hot. And then they just kind of go into extremes and go into a buying or a selling frenzy, depending on if it beat expectations or did not beat expectations, whatever. And then sometimes we wonder why price doesn't move. Well, that's because a lot of times it's priced in. So, just looking at the New Zealand dollar, even though this report's on Tuesday, when that report comes out, rates are going to drop. right? Assuming they do drop the 25 basis points. So you would think price would go down. Well, I want a position for that. I would like to position right here on that 2-hour supply. So I got this 2-hour supply right here. That's my play right now, is to just get in and try to catch that short whenever that report comes out. And if it doesn't, if price doesn't go, drop down, then no big deal. But I just don't personally see on the chart, guys, that it's really been priced in, because otherwise you would expect, a big downtrend of late, or at least the last week. But
it seems like the only reason it's really like that is because from your bottom left on that chart to the top right, it's been going up
right here
in that direction.
Right.
Really, the last. We can go back to the other chart you just had pulled up.
The other time frame. Oh, I was on the 2
time frame.
Sorry. 2 hour.
Okay. Well, just that little bit, it seems like. Yeah, we got that drop, and then right there going up to that area where your alert is at. Maybe that's what it's saying. That's just bullish, because maybe it's a time thing, but no, this is still bearish no matter what. It looked like it's trying to make, it's coming up to make the shoulder for the continued drop. But this
so
to me is nowhere near bullish.
Right. Yeah. So from here to here is bullish. But again, we had a lower low. So I'm looking at this, and I could be wrong. I very well could be wrong. I'm wrong a lot. We're all wrong a lot, right? But I'm just trying to position because, of late, if anything, it's been going up. But it's definitely looks like it's trying to roll over. I don't see where the banks have necessarily priced this in that it is going to drop. So I'm just going to try to take a low risk opportunity right here. Just give me just get me into this trade right here. What I would love to see by the time that rate by the time that rate decision comes out, my goal would be I'm already down in this area somewhere. If so, great. I may just let it run. If I've got a 20, 30 pip buffer, New Zealand dollar doesn't move that fast. I think this one only moves about 50 pips a day when you're looking at the average true range. So if I can get it to roll over, then I'd be happy because by the time that negative rate's released, you should see a drop, right? And of course, buy to cover ahead of this demand zone down here. That's really kind of the goal. But and then after all that shakes itself out, then I'll listen to my algorithm again. I just feel like that might be a good little opportunity there. But if I get into this trade and price is just staying right in this area, I'm getting the hell out before that decision comes out. That is the smart thing to do. I mean, I would obviously have a stop loss, but who knows? That thing could just wick and maybe get a horrible fill or something on the stop loss. So I don't want to be around to find out. But again, if I'm in this trade and price is down in this area by the time it's released, and this is just a tolerance because very easily it could go against me and stop me out, and I lose out on this, lose out on this unrealized profit. But that's my thinking. If price is where it's at now and it hasn't even, touched, obviously I'm not going to get in this trade. I'm just only saying if I'm in this trade by then. So
right.
So that's like I said. That's I think the first time I've went against my algorithm. You got to risk it to biscuit, right?
You got to be in it to win it.
That's it.
All right. So that was that. Bitcoin still waiting around on that pesky, 111,600 level. Still liking this 12-hour demand, 720 minutes. Yeah, still nothing's changed for the last 4, 5, 6 weeks. Still liking that last red candle down before that explosive move up. As always, I don't use the 12-hour hardly ever, but it looks pretty good. I mean, it looks great. And then obviously I drop it down to a 2-hour because I do have that 2-hour zone within the 12-hour. So I get that confluence I like to see. So there's my 2-hour candle there before the big spike up. So that's still currently my favorite Bitcoin play. Now, Bitcoin, I think it's new. I know it's neutral, but yeah, it's currently a -2. So, if we ever get a drop down to Bitcoin, if the fundamentals start to turn around, then that's where I'd be interested. If price comes down to this area, well, if it's a -2, -3, I'm probably going to ignore it. Or maybe I won't. We'll just have to see. But I just but it's kind of like DAX was, Michael. You remember? I was all hot and bothered over that DAX zone forever for what, 2-3 weeks?
It was for weeks.
Yeah, here it is right here. I was all about it. I was all about it. And I was looking at this zone right here, that candle right there. But I told Michael and Coach Richard, who, by the way, will be back tomorrow, everybody, just so you know. But yeah, did get that gap down and actually pushed right through it. So I didn't get the reversal, didn't get the bullish engulfing candle that I like to see. So the joke, Alex, was don't ever get married to a setup. So I was basically I was basically explaining, I'm just stalking it. I'm just trying to ask it out on a date. I ain't trying to marry it. But then she came. She was a little late, and we didn't get to go on the date. So I just let it go. Right? All right. So and then just to finish that. Where's my silver? Zagnut. Yeah. So as far as silver goes, yeah, I don't think we've gotten any closer to my alert. Yeah, I do have that alert set a little bit ahead of here. So that's just basically went sideways during this session. So no big deal on that. Oil, I did want to point oil out real quick. Let's see here. Oh, shoot, it's already 6:56. So yeah, basically I'm keeping an eye on this zone here. Now, the reason I like this one, and again, we joke about oil not setting up properly, but when it comes to these zones, I'm looking basically at those two candles right there. Now I know they're red, but the important thing is you got wicks on either side, so there's a little bit of buying and selling, trying to figure it out. There's relative equilibrium because it's a tight range. But yeah, I love the fact that it obviously gapped way the hell down here. That's really what I like the most about this. Gaps away from supply and demand zones are strong. They're very strong. And again, nothing's perfect. And sometimes they cut through like a hot knife through butter. But I'm definitely keeping my mind open to this because on my fundamentals, it is a bearish bias. Like I mentioned this morning, oil is giving me a -8. So that's a strong bearish bias. So just give me a simple pullback, close that gap, retouch that Friday close. A Friday close area, I'll be happy to jump into a short on that. Hopefully we don't get like a good strong demand zone created in this area with an explosive move up. That would probably negate that. But as it currently sets, well, we really just have this daily demand zone clear down here. So that last red candle before the pop up, that's really the only resistance I see. And if I even drop that further to a 4-hour, well, shoot, we don't really have anything until like this area here that could potentially, a little bit of resistance. But I don't typically cut through candles like that. I typically just go. That's it. I mean, on a 4-hour chart, that's it. That's the last red candle, but then you got green. Now I could further go down to a smaller time frame, 1 hour, 15-minute, 5-minute, et cetera, et cetera. Okay, so here's a better spot right here. I just turned that off. So here's my last red candle down before that gap up. So essentially, I wouldn't be worried about price potentially reversing to negate, I should say for a potential take profit, until price comes down to this area. So that's a 1 hour within a daily. So that's nice confluence. Now there's no volume to speak of. VSA candles are all puny. And understandably so, because that was end of the intraday session on Friday. way back in May 30th, right? But you can't deny the gap that has yet to be filled, right? I don't think it's been filled. It looks like it's trying to get close. But anyway, I just say, you know, I'd be definitely excited about looking at this. I mean, that's a potential big risk reward, you know, or a big reward to risk, I should say. 6 to 1, 7 to 1, 8 to 1.
Nice.
You know, assuming I put my stop loss in this area here, we'll just call it 0.20, go all the way down. That's that's pretty good. That's a thin range, but that's there again. That's part of the trade-off with stop losses, with range, the range of zone size. I mean, you know, sometimes I may have a 50 pip zone. Sometimes I may have a 5 or 10 pip zone. There's risks in all of it, but it's just a matter of, for me, making sure I get that reversal looking type pattern, whether it's bearish engulfing. You know, get the volume spiking in there to say that, okay, maybe perhaps this is where the institutions are jumping in, just to kind of get some more confluence. So anyway, that's oil. So we'll see if that sets up. I mean, I really like that. The only thing I dislike is the fact that it is touching into that daily. Well, a daily demand zone is going to be typically stronger than a, you know, smaller time frame supply zone, and vice versa.
Right.
So that would be my only real knock against it, because it is entering that zone. But again, it's high up on the zone. That's why I drilled down to that 1 hour time frame, so I could find that confluence I was looking at. So that's the real point where I'd be, you know, I'd be wanting to be careful. I'm not so worried about it just tapping in at the top. Hope that makes sense, but yeah, that's my plan on oil if and when price gets up there within the next couple days, I would say. New Zealand dollar, Aussie dollar, kind of a similar story. I mean, you got the same 2 hour supply zone, just like you had for the New Zealand dollar, right? There's the New Zealand, there's the Aussie dollar. So it's really the exact same zone for a potential play, but I'm just more interested in the New Zealand at this time, but I'll still keep an eye on that. Especially if they enter the zone at the same time, well, that's even more confluence, because now you got two assets from the same region tapping into their respective zones at the same time, matched up with the dollar. So that's the very same thing as, you know, looking at your indices to see if price is going to hit that zone on the index. I mean, we don't trade the index, difference, but you know, if I get my New Zealand dollar running into a supply zone the same time the ZXY is hitting the supply, well, it's just a little extra confluence. Same thing with the futures market. I go down to the New Zealand futures. Here we go. All right. 2 hour would be right up in here. It looks a little different, but you know, even if you go down to a 1 hour, well, that's still technically, I mean, that's still technically a supply. So something I don't think I've failed. Just because there's not a green candle and that before the drop doesn't mean it negates it as a zone. I essentially look at these wicks. So like price clearly came down here at one point and then clearly came up here on that next candle. So I can essentially draw my zone like that. Do I prefer that it has a green candle? Yeah, because it's easier to spot. But the reality is you got buying and selling forcing price into this little contraction point, which is essentially what a zone is. Price contracts, buyers and sellers fight it out before price ultimately leaves the zone. So yeah, it's just another confluence I like to look at from time to time. Is this supply zone going to get hit to where the futures traders are doing their thing? Yeah, it's just trading. All trading is stacking on as many odds in your favor as possible. And then dollar CAD and a dollar. Got this demand zone right here. This is a rally-based rally. So just looking at this just on a pure technical setup, devoid of the fundamentals. Just technical by itself. I mean, we do have a demand zone there. Might be a possible buy. Ultimately, we have another one down here, which is the origin of the move, which might even be the better probability. But again, if I take a small loss here, okay, no big deal. We'll just come down and we'll see if this zone works out. And that's offering better risk reward anyway, or reward to risk, I should say. It's very hard to pinpoint the spot where a market's going to go in your favor. It is, even with a really good setup. I mean, essentially, that's all price does anyway, is bounces from higher time frame supply and demand zones. Still easier said than done, right? Especially when you're drilling down into smaller time zones, and you might have 2 or 3 zones within that higher time frame zone. Well, which one do I take? Well, nobody knows. But the goal is, and this is where some people like the dollar cost average. One of my favorite traders I love to follow, that's essentially how he trades currencies. Now, he trades most everything from a daily time frame, so even higher time frame than I trade. But yeah, that's essentially what he's doing. Just going from support to support to support. Like, he might buy a little here. He might buy a little in this area here. He might buy a little in this area here, with the ultimate goal of price curling around. Because we don't, we never know when the banks are going to trend. I mean, when they're doing their accumulation at the bottom of a former downtrend, we don't know how many new lows that's going to happen. That's going to happen. That's essentially why that's hence the term accumulation. They might be buying a little here, buying a little at this drop right here. Oops, a little bit at that drop. Buying some more in this area. Click the button, Tiger. We show this from time to time, Michael, right?
Mm-hmm. For sure.
How accumulation distribution works. Now, because obviously we had a downtrend. So could this be their beginning of turning the trend around? Dollar cost average, dollar cost average, dollar cost average. Banks can do that because they got millions and billions of dollars, right? Before they ultimately push the market and trend the market in their favor. So that's essentially exactly what dollar Canada dollar looks like it's doing. Now, why else is that such a strong area? Because it's low on the curve. It's the curve analysis I talk about. On a 1 week time frame, we got our demand zone right here, that last green candle before the big spike up. And up here, you don't really have it in a zone format, but you've got a top. So if we got price curling around, this looks very similar, Michael, to the dollar South African rand currency that I used as an example last week.
All right.
So price is down, low on the third, bottom third. Well, what have we got now? This is ultimately the lowest point. We got a lower low, lower high. Okay, well, now we got a higher low. And then that didn't quite meet it, but we did have another higher low. And then finally we got the higher high. So is this the curling around? Is this the changing of guards? Is this the bend at the end? Like Alex said earlier? Oh, so far so good. We've got now 2 higher lows, and we've now got a higher high. So, just kind of going back down to where I'm at in the smaller time frames. Ultimately, I would probably like the risk reward better down here, but just looking at this thing on a smaller time frame. Oh, there we go. Got a couple opportunities. Take that for a move back up, or take this back up. And if neither one of those work, no big deal. We'll just keep going lower, because ultimately I think the better risk reward would be somewhere down here, or even just using the daily demand zone as it is, right? Got that daily demand, last candle down. So yeah, infinite ways to trade supply and demand. That's why I love it so much.
For sure.
Time we got 7:09. And there's my rattling, rambling. So did you guys have anything else you wanted to show at the moment? We got 5 minutes.
Yeah, I can close it out for us in the next 5 minutes. Alex, was it anything you wanted to add on to or anything?
No, I'm absolutely fine. I was just enjoying that masterclass there.
Yeah, I try to do it. I try to throw that out there every so often, just as we get newer, people in the chat. So it's always good to understand the absolute basics of market structure, accumulation, distribution, manipulation, right? So, which is essentially what me and Michael both trade. We just do it. We just tweak it and do it slightly different is all. That appeals to our personalities. So.
Yeah. And agree. That's what it's all about. I do see Tanaka saying, thank you, coaches. Really insightful session. Learned a lot about risk management, strategies, and mindset. Psychology has been tough for me, but I'm working on improving. Appreciate your time and energy. Yeah, that psychology is one of the key pieces to it all. And you don't notice that it's even a thing until you start, you get deeper into your journey. And you're like, man, why do I keep doing this? Yeah, this is a you thing. Sometimes it's your edge. Sometimes it's your risk management, right? But a lot of times it's the psychology. It's the heart. It's
and that's what I love. That's what I love about Mondays, Michael, because we almost never have any real substantive news as far as something that's moving markets. It's everything's based off of pure supply and demand for the most part, unless we get a headline, right? Which obviously we do have that one coming up for the Zelensky in the Oval Office. So it's just a great day, I think, to just kind of go over strategy and mindset and psychology. That's what I love about Mondays and really Sundays too.
Yeah. And it's big, right? Because I like to think that psychology encompasses so many things. You got, patience, discipline, like really just following your trading plan. There's a lot that goes into that one key piece. It seems like it's just one thing, and in actuality, it's kind of not. It's one thing to be patient. It's one thing to be disciplined. It's another thing to, I guess, follow your plan, which I guess still is discipline, but it's more than what meets the eye, so to speak, with that aspect of it. So not easy at all, to say the very least. So we also got Webb saying, shout out to Tanaka. Psychology really gets me even in back testing. Hopefully build the brain muscle. Yeah, that's what it's about, is building that brain muscle. Is what I was really saying earlier today, because it's key. It's key. And then really quick before we close out, since you were talking about this, Tiger, is that phase, right? You guys know I'm good on the chart markups and stuff, right? So this accumulation, manipulation, distribution phase. I wrote this up just to kind of even point it all out, right? Like, this is how I see it. Again, just that accumulation phase, collecting those contracts, collecting those orders, building books on both sides, and then just hitting it. If I want to go short, I want to see them hit highs first, right? So they hit it once, hit it twice, hit it a third time, pretend they're pulling back, manipulate you again back to the high, and then finally say, all right, we built the books up good enough on this side. Let's run them, right? Break, retest. This is where I say enter in here. I want to get in right here, right? You break that little, let's say, low. Now we're making lower lows. Again, nice pullback to that same area. If you can grab that where it says or here, both of these two areas are great to enter in. And it works on all time frames, whether it's the 5, 30 hour, daily, 4 hour. It doesn't even matter. This is the whole business. This is the whole game right here. And again, how you see it, may be a slight variance to it, but this is it all. AMD, right? Accumulation, manipulation, distribution. This is where it all leads down to. This is the whole pie right here. Is being able to identify, again, where you are in the cycle, not get faked out for those moves, and just being able to capitalize on what you already know is going to happen next, right? And then for me, it's all about that. Once I see this phase going on, right, I see my accumulation, I see my manipulation phase, I would just want to be part of the distribution phase. That's it. That's all I really care about. So when I draw up that cycle, when I, make that tattoo, as you say, Tiger, I just want to get in one of these two spots, which for me, again, would be level 1 and level 2. That's it. That's it. I don't care about trying to time the high or time the low and get me a gazillion of one R to R. No, I'm focused on base hits right here. If I can knock one off the park with a home run every now and then, I get some crazy, I grab one of these two setups and it goes 3, 4, 5, 6 R in my favor. Great. If it doesn't, I'm fine. I got on base. That's what I'm focused on. I say on base. That's what trumps everything.
Yep.
Yeah, guys. I think that's pretty much it. We kind of got time here. Any last words from either one of you before we let them go?
No. Alex, got anything, brother? We appreciate you stopping by.
Yeah.
No, I appreciate it. It's been fun. I've enjoyed this.
Yeah.
Yeah.
That goes at the snap of a finger. 4 hours, huh?
Yep.
Yeah. Oh, so quick.
Yeah.
Right.
Time flies when you're with some friends. So. All right.
When you having fun.
Well, just stay tuned for the next session here in 15 minutes. You'll get a couple of guys jumping on some everything, a little bit of everything. Coach Paul, Coach James, fabulous group of dudes. So keep an eye on them, and we'll be back tomorrow, 3 a.m. Central, 4 a.m. New York.
Absolutely.
Peace.
Thank you for having me.
Good. Take it easy. Alex, Tiger, hold it down.
Yeah,
I'll catch you guys.
Hola Prime. Trade with transparency.